Not going to fix that. All right, hello everyone. Quickly, I'm sorry I got a little bit, the only word I can think of is sarcastic yesterday. There were a number of questions that are always on the same topics, and I get frustrated because I don't mind that, the questions or the topics. I just get frustrated that I don't think I'm getting my understanding across. It's not your fault. It's something about how I present it. It's also the information is shielded from you, I think on purpose, but the markets are not the way you think they are. They should be. They should be. But they're not the way you expect them to be. One of the questions always comes up is about finger motion and why the shorts don't cover. Why are they waiting? When's the dividend? When's news? And all of these things, all as a preparation for a short squeeze, as if we could know when, if it's going to happen and when it's going to happen, and as if one of those announcements is going to trigger a squeeze. My opinion, which I think differs somewhat from Ham's, and I'll give you what I understand Ham's point of view is first, but we can ask him when he comes on. I think, and I can attest to Ham's numbers until I lost sight of that website. I can't find it anymore. But I used to follow every day on the gosh, I can't remember, short something website, FINRA's numbers of the reg show exemptions. In the United States, there's 4 tickets: buy, sell short legally, and the reg show exemption. What they do in America, in the US markets, from Germany, from Canada, from Panama, from the moon, is they can sell stock endlessly that does not exist. Under the reg show exemption, you can sell stock if you have not located it, have not borrowed it, do not own it, and you never have to deliver it. Why? Because there's no enforcement of settlement. You can move shares from fake LLC to fake LLC, illegal. And in the bond market, Goldman Sachs created the F3 button. It's the same thing in the stock market. I don't know what button they push, but it says to the broker dealer, hey, my dog ate my homework. I'll get it to you on Tuesday. By reg show rules, it's only supposed to buy, to my memory, 2 days. It might be as little as 1 day to locate those shares, to borrow those shares, to own those shares, to deliver those shares. Past settlement. No one follows it. It's abused at on a level which I can't imagine. You know, you would have to go back to a guy like Genghis Khan and his campaign against all of Asia and into the edge of Europe and the Latin Byzantine countries, Egypt. It's the reach of these people is incredible. They have no shame. They're like Meghan Markle. And they crime on a level of the cunningest cocaine smuggler. So when you ask, when is Finger gonna, why don't they cover? Why they don't intend to cover? They don't intend to cover. You ask, now Ham will say they're in trouble. They don't cover because they can't afford it to let it go up. My opinion is that's not, it's not a profit center anymore. It's not under compliance's view anymore. Regulators don't care. They do not intend to cover these trades. They will move them and move them and move them. But the difference is with Finger, I believe it's true, but we can't prove it. There's a guy on the American Stock Exchange who says that the failed to deliver, the reg show exemptions that FINRA reports are because of the private placements, and there is offshore stock which will be delivered, and that you are not seeing when the shares are covered. And so it's complete hogwash that these shares ever get sold on such a volume in any stock. There's systems in place. The regulators would watch it. So maybe that's true. I don't know. What I saw in Finger in a 10-day period was 100 million shares sold under the reg show exemption and reported by FINRA. I saw it. And the stock went from 7 to under $1. I think the shares are out there. But I also think it's under control. It's under control. That doesn't mean it'll always stay under control. Now, Ham's view, I think, is these guys are trapped, and with any uptick, it could start the buy-in pressure. And that, number one, that's how it used to always be. And when I got in here and I came on with my presentations about Finger and MMTLP once it stopped trading, and GTII, and you know, based on studying the charts of previous short squeezes, I had huge numbers because it was my experience on Wall Street that when compliance and trading were inside of the broker dealer and the brokers, same archway. It happened, and compliance cared, and regulators cared. Now, since the great financial crisis and the complete lack of any effort on the Obama administration to rein in banks, and of course you expect that from Republicans, but Obama was no FDR. Since then, the banks, you bailed them out as the taxpayer. These guys walking the globe like great heroes, from the guy that just hired Juan Soto to the head of BlackRock to the head of Goldman Sachs. They bestride the world like they're the next gods. Well, when they got in trouble, and the free markets they don't want regulation, we want free markets, they should have been wiped out because of the level of risk they took. Instead, under Obama, they divided the investment banks, a lot of the roles, and the banking, trading, and the prop desks, they just send them out. And the banks became part of the FDIC. You bailed them out. And now, when you try to make money, they don't care about you. The regulators don't care about you. So anyway, with Finger, no, in my opinion, there's no news announcement. There's no dividend. There's no sudden spark which is going to make the stock go up all by itself. Where it'll happen, and it'll come out of the blue, is when there is some buying in the company. When the stock does start to run, you'll see it in the charts. You'll see it in the volume. You'll feel it. The stock will start to move. And to me, where finger motion is going to hurt those who are short the stock is when the price goes up. That's the one thing they can understand. Those positions they have to either carry or cover. They move it around because you and I can buy 1,000 shares. We can buy 10,000 shares. We can buy 100,000 shares. And then our buying pressure in this market that Gary Gensler calls the deepest and the most transparent in the world, there's no price discovery. So our little bit of price discovery on the demand side gets overwhelmed by enormous fraud that never ends and no one cares about. And the criminality goes on so much that MMTLP's people have to go down to Florida to try to explain it. And they are doing it to their great credit, Anyway, that question comes up all the time. When's the dividend? Why don't the shorts cover? What about the real? It's all digital. Wall Street used to actually give you, when you got a certificate, it was real shares. Now what the American financial system is, when you deposit cash at Chase Manhattan Bank, it is immediately digital. And I've used the example of that movie everyone watches at Christmas time. I should put that scene up next time about how, well, you know, Fred, your house is here, and Laura, your jewelry store is here, and all your money isn't in the savings and loan. We lend it out to the community and out, and what do you need, George? Because it's called fractional reserve banking. And it used to be a 10-to-1. You had to keep reserves at 10%. 10%. Many banks keep more. But under the evolution by these gods of the world, like Cohen, who's essentially a criminal as far as I can tell, and Ken Griffin, who is a criminal as far as I can tell, and the rest of them, Goldman Sachs, but also the bankers, the commercial banks, they have turned that lending from 10-to-1. It's probably 50-to-1. I've heard in the financial world, it's 100-to-1. You're lucky if there's $1 covering $100 lent out to the system. And how do they hide it? Obama is on the side of the banks. Hillary Clinton is on the side of the banks. Republicans have historically always been on the side of the banks. There's no FDR who says they hate me and I welcome their hatred. There's nobody like that. Maybe Jimmy Carter felt that way toward the banks. I don't think at that time credit card rates were capped out at 13%. Can you imagine that? Joe Biden, state of Delaware, corrupted by the credit card companies. I read now that interest rates are 33% on credit cards. I don't use credit cards anymore. My father always used to tell me, just American Express. I don't even use that. I might, that's not bad advice. He said, because you got to pay it off at the end of the month. I never listened to him. But more than once, you buy things stupidly, and then something that you get on sale so urgently, instead of paying $1,000, you paid $800. By the time you pay it back, you're paying $3,200. Credit cards should be taught in high school. But anyway, the banks have digitized everything. It's all hidden to you because you get a statement and you get big advertisements. You go into the branch, there's a big Chase Manhattan on the door, and everyone's nice, and there's glass windows, and everything it feels like it's secure. But it's all backed by the Federal Deposit Insurance Corporation. And in your mind, in my mind, it's backed by the full faith and credit of the United States government. If we have another 2008, we'll get a Folks that comes in and he'll promise reform, but he won't put us, or she won't put a single banker in the docket because they'll bail them out. So we count on the financial system to get bailed out. There's no bank runs anymore. It's all digital. Who cares if it's 10 to 1 or 99 to 1 or 1,000 to 1? It's all digital. The Federal Reserve, the Treasury, the FDIC, the Congress, they can just create it. And it comes into the account digitally, and you see it digitally, cash, cash, cash. But you don't think about it because you can go to the debit, the thing, ATM, and beep, boop, 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 $300, $500, $700. Hey, I got money. But try to take your whole account out when everyone else is trying to do it. You won't be able to. You know, our banks are so in need of cash. The rumor is, and I think there's some substantiation to it, they take the drug money during the night, comes in the basement at the venerable banks in New York. Hey, lucky boy, I'm not upset. I'm just talking loudly. So anyway, that's the financial system. But what you don't understand, and this is the other question that always comes up, they've done it to the securities system. This is my idea. I haven't heard it anywhere else, but it's obvious to me. They've turned certificates into digital entries. You have a problem? Just create more digits, more digital, more digital. So it's in your account. I sent my cash, which is digital anyway, and it goes into Charles Schwab. It's there, ready to go. Great. I want to buy finger motion. Great. You got the cash. Trade's executed. Done. I own it. Well, no, you don't. Number one, the cash you got was just digital. The certificates you get are just digital. It's all crap. It's all crap. It's all a fraud. It's all a con game. And we live in it. We believe it. But the banksters, what they're doing is expanding assets under management. This is a company I bought 300,000 shares of. It's a great company. It's a silver company. The older CEO got in a fisticuffs with the chairman of the board in the men's room over a woman. So they brought in a young guy who I talked to. I said, you're getting abused. Oh no, I'm raising this money. It's a great company. It's a great company. I now have 30,000 shares. I'm sure by the time he's done getting slaughtered, I'll have 30 shares. just like this medical company I just threw away. I have one share certificate. I started with 150,000. That's the certificate form. Just like the value of the US dollar, down, 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 dive, 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 dive. They're doing it to the securities. And they think because they went to Harvard or Yale and they joined the same fraternity and they both porked the same tri-delt, that they can trust each other. And they set up these systems to steal from you and me. They need war. You noticed while you're focused on whoever this idiot is that did something on a subway and this other Ivy League killer who did something somewhere else and this singer who dates a football player with a temper, and you're all focused on that. It's all on the front page, and Trump is this and that and that. You're all focused on that, what the View says. Do you know what Netanyahu does? Israel keeps expanding, 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 and killing people. A people without a land, for a land without a people. All hogwash. All hogwash. Netanyahu is a criminal. That's verifiable. If it needs to still be proven in court, then that's opinion. They've just declared the Golan Heights theirs forever. Well, God has a funny way of responding to challenges like this. But that's what the banks want. War in the Middle East. War against Russia. Let's get their assets. Why? Under Folks, a man who bombed every single day of his presidency for 2 years. The first president in history to be at war for the full 8 years. But under Folks, under the idiot president, Poppin J. George W. prance around and act like a peacock president, and then under Bush, what's his name? Obama. Soweto, maybe his name's Soweto. But and then Trump, and then this complete nightmare of Biden, and we'll see what happens on Trump. But Trump's putting in warmongers, and he absolutely supports Israel. Everyone called him anti-Semitic. Why? Our debt has now sitting at $36 trillion. 36 trillion. It broke $1 trillion under Reagan, 1 trillion. I want to say to my memory that when George W. left, it was 8 trillion, but I could be off on that. But we're at 36 trillion. Every 90 days, another trillion comes off. What slice? Every year we're run a deficit of 3 trillion, 4 trillion. What slice of that does Mickey Cohen or Larry Flink or George Bloomingfeld at Goldman Sachs? What little slice of that do they need to be the richest men in history? Not much. Not much. War saves the banks. War saves the financial system. But what they're doing now, that they control regulators, they're doing the same thing with securities. They're expanding the number of securities in the system digitally. Is it 10 to 1? I doubt it. 15 to 1? I doubt it. 30 to 1? Maybe. But I bet they're pushing the limits of it. So you ask, are there real, what about the real shares and the fake? There's no such thing. They're all digital. And the reason there aren't squeezes on this, there's no enforcement of settlement. So let's say it's 1 for 30. It's one real certificate for 30 shares out there. Where do I get that number? I didn't highlight it, but I believe I read it here that under folks, they expanded the broker-dealer margin from either 10 to 1, it might have been 15 to 1, to 30 to 1, 30, 35, I think it was 30, might have been 35. Anyway, the concept is there. So that means if everybody that has real shares comes into the I don't know, let's call it Canaccord at this, let's call it Ameritrade at the same time, says, hey, I want my physical shares, deliver. Well, it probably will cause a stress to the system, and it may cause a squeeze. But the funny thing is, even if all the real shares came, I can't do that arithmetic in my head, but it's 1/30th of all the shares out there in the system. So the banksters expand this paper money to you with war, with forgiveness of student loans, with absorbing 20 million new people and putting them on Medicare and Social Security and up in hotels. That's not, they get you arguing about the moral issue. It's not about that. They want to print money. They want to create more money. Why? Even, is it called SNAP or SNAP, I think. Smart automated payment, Cigna National Automated Pay. Anyway, when people go on welfare or they go on food assistance, they get these cards, I guess. They go through Morgan Stanley. Everything goes to the banksters. Everything. When they want to take homes from people, they lend money to each other for nothing. Mortgages are created out of thin air. But when they want that property, they control everything. And they take it. Anyway, there is no real shares, fake shares. They're all digital. It's all blended together. It'd be like, where's the gin in my gin and tonic? It's all blended together. The gin, tonic, and water, it's all blended together. Can't separate the gin out. Can't separate the real shares out. What I think will cause pressure, and you never know how long it'll last, is one, sudden unexpected buying, and that can come from anywhere. I mean, I don't know, a guy like his granddaughter could decide that she wants to buy 50% of Finger Motion and doesn't care what price she wants to pay. That could start it. How likely? Very unlikely, but it's not zero. I think the steady performance, and I say it over and over again, of the growth in revenues cash flow, and earnings. Once it becomes predictable and growing and visible, Wall Street can bring it down to the now. It can't be lumpy. You can't have a streaky 4 months and then have a down 6 months. Juan Soto just got all that money he gets because he never goes into rarely, and it's short when he does, goes into a funk because it's predictable. And that's when you discount future earnings today. Well, if that happens, all of a sudden finger motion isn't $2, it might be $3, $4, $5. And what kind of pressure is that putting on those huge sale of shares that have never been delivered? Well, we can assume, we don't really know, but it puts pressure on. But as long as there's a bull market, as long as there's war, as long as we argue with each other, as long as the government's debt goes from 8 trillion to 36 trillion, and I've told you I think it's headed to 100 trillion, why should the banks worry? They can just shuffle things around. But at some point, the game will be up and it'll be clear. And maybe all the stocks have to be in trouble at the same time. I don't know. Anyway, let me stop on that subject. The other question, the dividend on Finger. The answer is there. It's not the company. It's not the company. The company offered to you and me 1 share restricted for every 10 shares we have. They had to put it up before the SEC. 2 things happened. One, the SEC does everything more slowly than the World Bank when they want to. Secondly, Finger Motion's auditor resigned. This is information that's available to you. Well, the SEC certainly is not going to approve a dividend when a company doesn't even have audited financials. So Finger Motion hired a new auditor, and unfortunately, they have to re-audit 2 years. I've never known an auditor, a lawyer, to do anything quickly, or a house painter to do anything quickly. Why? They get paid by taking their sweet ass time. They don't work late. They don't go ahead and miss their daughter's graduation because the client is more important. No, they just, hey, I did my 7 hours today. Well, I'll get to it when I get to it. So there's an auditor redoing 2 years and the new quarters of Finger Motion's financials. The auditor is taking their sweet ass time. Is this causing stress in Finger Motion and making Finger Motion frustrated? Yeah, they have other things that audit is a predicate for. But it is the indication from the company that the audit will be completed by mid-December. Well, we're on December 10th. Mid, I think, is 15, maybe 16. Might be sooner because of the holidays, but whatever. Roughly the 15th. The audit should be done. The SEC should, matter of fact, approve it. But it is the SEC. So there's always a risk something will happen. But it should be quickly. And then once the SEC approves the dividend, the company needs to put it out to full worldwide information that the record date to earn that dividend is 10 days from now. 10 days, normal days. So there won't be any news on the dividend. It's not mysteriously or criminally being held from you. You will get a full 10 days of notice. You'll probably hear the audits done for other reasons. And I would expect the SEC would be rubber stamping their approval since they've had plenty of time to ask any other questions of the company. And then you'll get 10 days notice. Every day, where's the dividend? What's the dividend? How come no, it's just a process. And it's annoying. I know it's annoying. And then I don't know what that is. PS71 asked me yesterday about WDHI. I don't know, and I've tried, and I'll keep trying to get answers on WDHI. But again, that's a situation where the SEC has to approve it. The last information we had that was public was WDHI was doing an acquisition and wanted to grow. My suspicion is that everything may be on hold for acquisitions, but the company wanted to launch WDHI at $5 a share. I have no behind the scenes information on what that company's worth, but it would be foolish for the company to make those shares tradable if they're only worth 50 cents. Everyone will sell and the stock will suddenly be 5 cents. It'll be in an endless loop where they can just short it and short it and short it, and the company goes to acquire another company, and the other company says, I need 10 billion shares of your stock, and then they go for financing, and the financer says, well, we can sell 30 billion shares of your stock, and they get it down to nothing. It is not advisable. It is not in your interest to have the company make those shares tradable or distributable until they actually do have value, they do have cash flow, and they can raise money without destroying shareholders. But I didn't get an answer on that. I'll keep trying. On the other one, collective audience, CAUD. There's approximately 2/3 of our distribution. In other words, if you owned a certain amount of logic, you received 1-for-1. The Aubrey advisors, who I think criminally or incompetently at best destroyed, intentionally or out of extreme ignorance, destroyed that client, along with Chadron Financial Advisors, with a complete toxic financing. They intended to do it, and they did it. I predicted it in August when we saw the financing. The Amex guy said, oh, no. There's systems in place. All you got to do is get the algorithms buying, and the buying will get it. Whether I'm right or wrong, which theory proved correct? I said it would go under $1 a share. Oh, no, 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 you're crazy. I don't know. So far, I've never seen that theory fail. So anyway, I believe we got, oh gosh, I think we were supposed to get 8-for-1 distribution, a 1-for-8 distribution, and we got, I think, 1-for-13. I'm really stretching my memory, but it was only approximately a third of our shares could we trade. And unfortunately, under the Aubrey advisors sting operation, they allowed their client Polar to get out at $40, $30, $20, $11, $8, $7, $5, $4, $3, and below before we ever had a chance to sell anything. And now there's 2 Aubrey Advisors board members. I think there's a Chadron Financial too on the board of Collective Audience protecting their theft. That's my opinion. Now, I have been impressed by Peter Board's efforts and his ability to bring in the team. And when the NASDAQ said, hey, you're going to be delisted, and so the advice, I'm sure, from Aubrey, Chadron, and all the criminals was, well, reverse split, and we'll give you some money. And the lawyers say, hey, you got to do it because otherwise you're gonna be sued, and the lawyers are all in on it. Well, I give great credit to Peter Boards. He said, no, pound sand. I'll go to the over-the-counter. So he did not issue, he didn't do the reverse merger, reverse split, and he didn't issue more stock. But he is still in the thrall of Aubrey. He still has out there and at the money raise that goes on from time to time. But I think he only taps it for the smallest amount. So his race against time, even while these devils are on his board, in my opinion, he's got to bring the embers of his fire. That log is hot, but it's not a flame. That log just burned down, and you can still see the orange glow. And there's some embers right in the middle, but there's some ashes covering them. And you've got raw logs on the side, cold. Some might even be green. And somehow you've got to bring all of this wood in without killing the ember. And you've got to bring in a new company, a new team member. And you've got to do it without issuing endless amount of shares, which is what Polar wants and Aubrey wants and Chadron wants, because it protects their theft of 100 million, 150 million, which occurred out of the gate. It was a setup. But anyway, I think Peter is building that company. He is doing his best to keep the number of shares as small as possible, in my judgment. And he's not releasing that. To my memory, it was about 76% of the shares that we received. I think it was on a 1-for-13 basis. So for 13 shares of Logic, you got 1 share of Collect, something like that. I should have, I'm sorry. I didn't go back through the filings. I'll do that. I'll have that for next time. I'll have the exact breakdown. But theoretically, we were allowed to sell a certain amount of our stock free to trade. And the promise was we'd get the rest in 11 months. Some of you guys did sell your stock at $3, $2, maybe a little higher. And bravo, bravo. But the rest we haven't been able to sell. So the question yesterday was, where's that stock? Why haven't we got it? I took it as a challenge that somehow the company was had lied to us and maybe was pulling a fast one on us and was not doing what it said it would do, I guess. I don't know. I don't know why I reacted the way I did. But the fact is that the agreement to restrict our shares from sale was made by the Aubrey Advisors team to protect their theft. It's their scheme. So it's something that Peter Board's inherited. And remember, there's quislings on his board, but he likes them. He respects them. So I don't know. Somewhere I must be wrong in my analysis. But what I learned, not directly from the company, but what I learned is that the restriction on the so-called logic shares of collective audience will not be lifted until collective audience sells at $2 and above and for a sustainable time. So in other words, there is no expectation in the near future that we're going to have a free to trade shares in collective audience, which represented about 76% something of our distribution. They're going to remain restricted. He's not going to lift the legend off as a matter of policy because he's fighting the setup that Aubrey Advisors put in place so that they can have a team working their ass off, printing new shares so Polar can continue to steal from you. And there were two hedge funds. I don't remember the name of the other hedge fund. The main one was Polar. It's all planned theft. It's done out in the open. It's done in a confusing way. The regulators are in on it. The broker dealers are in on it. Your broker is in on it. Everybody's in on it because it's so much money. And I've shown you the article about from the toad with the picture of the toad about the studies they've done. It's trillions of dollars. My memory was $17 trillion of this criminal activity, selling stock that does not exist with under the auspices of an Aubrey Advisors and a Chadron and the lying lawyers next to him. Out of one bourse in Europe, 1 year. Anyway, so the answer I got on collective audience, which I'm heartened by, because I own collective audience shares that I can't sell myself. I'm heartened by it because they're not going to lift the restriction until it's $2 or better. I'd even, frankly, be happy if he told me it would be $5 or $7, because that's where I have a chance to actually get a return on that part of my investment without destroying the stock price, which makes it. Remember, the goal of Aubrey Advisors is to, whatever the good news is, if you start with 300,000 shares, by the time the news comes in, make it 30,000 shares. By the time the company raises money to actually go down and get the silver out of the ground, make it 30 shares. So the value doesn't change the risk to Aubrey's advisor's real client, which is Polar. It's not, they don't give a crap about logic or Peter Boards. They're just there with their Cheshire smile. Anyway, all right, that was one of the questions. And there was one more. About the gold company. I get frustrated with that one because it's really my responsibility now. I was able to source and find an investor for $5 million. And it was very tough. It was extremely stressful. The negotiation, frankly, was difficult because I wanted more control, and I just couldn't get it. But now, embarrassingly, I haven't been able to perform yet as far as the company's concerned. So I can't get the answers, and nor should I, frankly, that you're really asking is, are we making progress until the money comes in? Now, the use of proceeds was they had to get their leases shored up, which they did. They, there was some sundry legal and other what do you call them, permits, those kind of things. That's all done. It's all done. Then they had to get started on building the pilot plant. What a pilot plant is a miniature version of a commercial plant. So it's got to be big enough to produce gold in volumes that are believable. It can't be off, I don't know, it'd be like building a model, I don't know, a model something, a model boat, and putting it in your bathtub and it floats, tips over a little bit, and then just assuming that's going to work out in the ocean. No, you gotta build the whole thing and see if that design is going to work. And that's what the point of a pilot plant is. This pilot plant is going to produce, to my memory, 36,000 tons of sand a day. Process 36,000 tons of sand a day. When the full commercial plant is in place, they could produce 1 million tons, 2 million tons, or more a year. I don't know what that divides out to on a per day basis. But 36,000 tons is a significant amount to produce. So anyway, the use of proceeds was $2 million to renovate, this is by memory, renovate and upgrade that plant. And then there was $1 million for the G&A and the overhead of getting that done, the people, basically. There was, I think, $500,000 or more needed to order the equipment. And these are going to be big machines, and it's going to be done in a conveyor belt process. And then I think there was some money to, there was some money going to some of the people who had financed the process over the last 4 or 5 years. Anyway, I gave it to you. It's in the material, but it was $5 million. One of the investors who did a study of the proposal and visited with the company, visited with the genius guy, the metallurgist, put up $1 million. on the same terms. And that has been enough to move forward without delay. But I bet stresses are coming now because it's been at least 2 months, if not almost 3 months. Anyway, the answer I got today, I asked last night, but I got the answer today on that, is regarding this 5 million. Everything is moving and on track per the financial institution which is distributing the money. So I do expect that money to come in and go to the company, knock on wood, this week, might be next week. I'm not in control of that, but that's what I expect. It is going to go, once that money is received, it is going to go to the company. I do think the orders are in place. My sense from all the conversations I had is they will be able to get the machinery in place, installed, the shop floor cleaned and ready to go, the people working. I'm going to say within 90 days of receipt of that money. It might be a little longer. Maybe it takes 120 days. And as soon as those systems are in place, they will start processing the sand and producing gold. And I think that's from receipt of the money, that's anywhere from 5 months to 9 months away, to give a little buffer. And sure, maybe in our mind, we should say plan on a year. I mean, anything can happen. But the point I want to make is once everything's in place, the first day, the first week they start processing material, the news will get out. The news will get out. So I would expect awareness to come much more quickly than 9 months, 12 months. It's a pilot plant. As each day's results come, they'll tweak the process one bit at a time. They want to maximize the results, and they may get the recovery well over 0.2 ounces of gold per ton on average. So that's the answer I got on that. So I think, all right, the news, yeah, thank you, Railtown. I wanted to point out what happened with RLAIF. Let me show you. Look at this. The Fed is trying to get rid of inflation. I think it's all about energy. If oil remains cheap, they'll be able to cut rates. NASDAQ is higher after a new chip from Google. Good for Wall Street. Deal making is going to go up. Merrill Lynch says investors have saved $250 billion by investing in ETFs. They're looking out for you. All right, so Nixie's at $4.80, $4.80. They announced the S1 to raise money, and it obviously hasn't. I mean, it takes a while to get approval. It's interesting that it shows strength, which I think is great. But at 479, I think most of you are close to doubling your money. I'm not telling you what to do, and I remain optimistic, very optimistic on that stock. But looking at the calendar, and I don't know why I didn't do it before. Here, let me see if I can highlight. Oh, shoot. What did I do wrong? What did I do wrong? All right, there it is. There's Nixie. Let me just see if I can highlight to show you. I'll do it in green because it's Christmas time. Look where Christmas is. I don't know if you can see. Let me go back here, see if you can see that. I don't know if you can. Oh, I see what I need to do. I need to, maybe if I do it over here. Yeah, I'll do it like that. See where Christmas is? It's Wednesday. So I think Wall Street's going to shut down on the 20th. And then New Year's is also obviously on a Wednesday. So I wouldn't be surprised if Wall Street doesn't come back to work on the 6th. So anyway, my concern with that, I don't know, it looks very strong, but I don't know if you can see my little arrow here. At 479, you've basically doubled your money. I think you could take some of that money in NIXX, take a profit, and buy RLAIF. Buy RLAIF under 40 cents, under 50 cents. And I really think this stock, RLAIF, could go up 3, 4, 5 times. Don't get greedy in a short time frame. Maybe it's January. I don't know, but I think it could be sooner. Partly because, as Ray Dan said, the news. Let me show you the news. Let me show you the news. It's not working. I don't know why it's not working. Let me just go up. Yeah. All right, wait. I guess everybody in the world is using Yahoo. So let me go to OTC. Exit page. Oh, snap. Now we're back to Yahoo again? Okay. Okay. Just cancel that. And let's go to pick another. We'll go to the top 30. All right, we'll do this. I don't know what happens with Yahoo. Sorry, Ray Dan. Let me just see. Let me just see. I'll go to OTC markets. Okay. All right, let's come back here. Let me see if I can find the news on OTC markets. Yeah, all right, let's see if we can find it. Okay, here's the news. Let me make sure you can see it. Yeah, you can. Okay. Railtown AI is accepted into the Advanced Micro Devices Partner Network to accelerate AI-driven innovation. Railtown is thrilled to announce its acceptance into AMD's new independent software vendor partner program. This partnership marks a significant milestone, enabling Railtown AI to leverage AMD's innovative hardware and software technologies to further enhance Railtown's AI-powered platforms. This strategic partnership aligns Railtown AI with AMD's robust ecosystem of technology providers, enabling both companies to collaborate to deliver transformative AI solutions. By leveraging AMD's advanced computing capabilities, including high-performance processors here in the United States and GPUs, Railtown AI aims to optimize its platform, provide developers with faster, smarter, and more efficient tools to enhance software quality and reduce development cycles. That's a lot of wording, but basically, this technology, as I understand it, can reduce the requirement for a company trying to clean up its software from hiring a whole team of outsiders and spending 9 months locating the problem and fixing it. It can actually, because of the AI, make it do that same task in minutes. That's what I've heard. I'm not a technology guy. That's a quantum leap in performance. So Marwan Haddad says, joining AMD's ISV partner program is an incredible opportunity for Railtown. AMD's advanced hardware and AI solutions are a perfect match for the high performance demand of artificial intelligence applications. Their commitment to innovation aligns seamlessly with our mission, top-tier solutions. We look forward to harnessing AMD's powerful technologies. So through this partnership, Railtown will harness cutting-edge technology to enhance Railtown's performance of its flagship solutions, including error and log monitoring, release management, intelligent code analysis. Those are all fancy words for what I tried to summarize. They can do in minutes what it used to take teams to do in months. The AI technology empowers developers, software developers, with powerful, scalable tools to meet the challenges of modern software development. There's a lot of repetition in that release, but it's excellent news. And let me see if I can there was another piece of news. Maybe it was a press release. So let's look under disclosures. No. Let's look under, let me do it. Let me see if I can get it on a different website than Yahoo. Market Watch. How about Market Watch? Here. This is the other news right down. Let me zoom in. Zoom in. Zoom in. Okay. And then finally, let me make sure that you're seeing it. Yeah, you are. Okay. All right. Railtown closes 2.1 million private placement. Railtown has successfully closed a non-brokered private placement, raising $2 million with both stock and warrants. There was more to this story on Yahoo. All right, I'll try Yahoo again. Let's go to Yahoo. I don't know, guys. I can't get Yahoo to work. Railtown closes 2.1. Oh God. Exit page. Railtown closes 2.1 private place. All right, here, let's see if the news is here. It's the same. It's the same. Well, anyway, the warrants have a, let me just say to you that the warrants under that placement have a requirement, I wrote it down, that the people who have the warrant must exercise their warrant. So that's more capital for the company. If the stock is over $1.20, they have 10 days to exercise that warrant. I I can't bring up Yahoo to read it to you. But so the warrant Railtown is at 60 cents. The stock, once the stock price gets to $1.20 RLAIF, the holder of the warrant only has 10 days to exercise that warrant. So what does that mean to me? That means that the CEO of RLAIF has created two, which I showed you before. He's created two companies previously, one of which he sold to Microsoft, and maybe the second one as well. But he knows how to keep his balance sheet and his cap table clean. So, having worked with technology companies before and being in these spaces, I believe that when a powerful new technology team creates something that transforms the tool set that developers have, they sell the company. They sell the company. And I showed you on the website, they do business with Microsoft, now AMD, NVIDIA. So my guess is you don't have very long to take a position in Railtown under 40 cents or under 50 cents. My guess is it's a good longer term investment. What do I mean by long term? 9 months, a year. But I think everything will accelerate. And I think that clause in the warrant formula indicates that the CEO is keeping his cap table lean and mean. Why? Probably to sell the company. It's highly unlikely that even with such a great team that he has, that he can compete in the lightning speed that's required to constantly upgrade software technologies and to build out the teams and to supply the demand for his product quickly enough to avoid competition down the road. Now, a company, I don't know, an AMD, a Microsoft, a NVIDIA will come in and it's just a small check. They'll pay, I don't know what, $1 billion, $2 billion, $3 billion for the company. I made those numbers up. I have no knowledge of any numbers. But they'll just write the check to just quickly plug and play this solution, and then they'll devote the resources to staying ahead of the market. And Railtown's already inside of the Microsoft ecosystem. Now it's on AMD. They closed the financing, which is not toxic. And the warrants are not long-lived or long-lived. They will disappear 10 days, by definition, 10 days after the stock trades at $1.20. So I really think Railtown moves to the front of my year-end trading ideas, not by a long shot. I'm not... You have a couple, 2 or 3 really good ideas for trading, and I'll say it. One is Railtown. I'll go ahead and say the name. Nixie is another, but I just think Nixie might be. I just showed you the calendar. I think that might be shifted a bit, just coming up on Christmas, New Year's. All right, Ham's trying to call me, so that means shut the F up. So let me get Ham on. I've had the phone right here in front of me, and it doesn't show up that he's calling, so I wasn't ignoring him. But
battery 100%. Connected to Bill's iPhone.
Yeah, you're right. He's called me 4 times. Yeah, where are you?
I'm in my car. I've been trying to
know.
contact you, but I can't. I called, but
Well,
everyone tells
I
me
didn't see it.
hurt.
I didn't see it. I
They say you're very
Talata
talkative.
Zim, who I guess you know, just told me
Oh,
that
okay.
that you're trying to call,
No problem.
and I called you immediately.
All right, so just give me a quote and finger motion, and I'll start going.
Let your fingers do the walking.
That's right. I'm like,
That's not the quote you wanted?
I'll do Nancy Sinatra. These boots are made for walking.
All right, hang on. I gotta. I can't.
William, with your bad eye, you're like a cyclops.
I left the other my other computer over there, but let me get a quote. Yeah, I'm having a hard time seeing. I have to admit that. I literally can't see anything anymore out of half of my eyesight.
Don't worry about it. It doesn't make a difference.
Hey, I got it. I'm slow because I don't have depth. 197, down a penny.
No problem. I had to go feed a friend's cat. My friend who's a stock loan guy on the street who gives me some scoop every once in a while. So he asked me to help. He was away with his family to go take care of their family cat. So I had to drive 30 minutes to go do it, 30 minutes back. So don't do it. I did that already. I fed the cat, cleaned the litter, and took care of everything, William. So I just don't have any idea what's going on in the equity market. So
it's going up. The market's going up. Google's going up.
Right. Everything just keeps going up, right?
Everything keeps going up. I mean, it's a melt up, I think, going on.
Well, that's what you said. You've been saying that there's going to be a melt up, and that's what everybody's saying now. You know, we get these melt ups where at the shorts and people the melt up. So everybody understands it. The melt up is killing who, William? The shorts, right?
The melt up is killing the shorts, and it's going to be very difficult for the shorts.
Pressure on them to borrow money,
and that might be part of the reason for a further melt up too.
That's what the shorts are trying to cover. You're getting a melt up. The prime brokers are pulling back leverage because these guys are getting hurt. Yeah. The prime brokers are not in the business to get wiped out, so they cut down the lending, and these guys all get trapped. They're in these short positions, whether it's IBM, Microsoft. It doesn't make a difference. They're all getting their clocks cleaned here.
Yeah.
All right, so everybody, I speaking with William. William wants me to explain to everyone again this naked short selling scenario and what happens here. And he thinks that people really don't understand it all. So
well, maybe I don't. I just you don't get as frustrated as I do when you explain it. So that's
again, we've been doing this a long time. So maybe because I speak fast and people don't understand it, but let me go over it again. This whole the whole Lynn partners and their position, the shorts and the whole thing. I'll do it nice and slow. Lynn partners had a toxic debenture, meaning they could lend money, they lent the company money, and the company has taken care of the liability and got rid of them, so they have no access to get stock from the company. But their pattern is to sell as much as they can and then drive it down as low as they can, and they make a spread. So if they sell it at $5 and buy it back at 2 cents, they make $4.98. That's that whole toxic debt spiral financing. That's the game. It's a complete fraud. Now, many companies do not have debt spirals, but they use options and other techniques to try to do the same thing. Okay, so this is branched out from small companies borrowing money to big companies being manipulated. So it's in many different ways. This is what's going on here. Now, in finger motion, they naked shorted so many shares that they branched out and started to short stock by borrowing the shares. So we have two short sellers, the naked short, and we have someone who's borrowed the shares. The person that borrowed the shares has borrowed 1.6 million shares. It was as high as 2 million over the last 2.5 years. And now it's 1.6 million. The last report, they covered 100,000 shares. We will have the new report, I believe, out tonight, sometime tonight, maybe tomorrow morning. And I don't know what they've been doing. People say, well, are they covering? Well, I don't see any buying. So the only way they are covering is if the naked short is selling more and they sell it to the real short. So the real short buys it from the naked short. Those are the wash trades we talk about. And the naked short gets bigger and the real short goes lower. We will find out tonight to see if they actually have done that. And I can only answer that question once I see the data. The naked short and the real short are the same person, because short sellers do not operate as one. They may operate as one when they do their attack, but it's everybody for themselves once the shit hits the fan. And in finger motion, they knocked it down, yet the real short keeps increasing it. So they're basically the same person. Well, I label that the real short is Feast and Mom, because no one would do that trade unless they're being told to do it by Jeff Easton, because it's the most moronic trade ever. And you say, well, explain why it's such a bad trade. This guy short 1.6 million shares. As of right now, the most they can make is $2.20. If the company goes to zero, $2.20 times 1.6 million, I'll just round it out. Make it $2. So it's what, 3.4 million, $3.4 million. That's the most they can make if the company goes to zero. It could take 100 years before it goes to zero, right? For the right to be short, the real short has to pay all these fees to borrow shares.
That's right.
It's called the cost to carry a position. It's not free. The naked short pays also, but they pay a different way. I don't want to explain that one. Hold on one second. So the real short has a fee. We can all see it, and we can actually calculate exactly what they're doing. And that's what I report on. And that trade is now soon to be upside down. It was at 245, it went to 230, and on Monday I started calculating already, it's going to be 220. The stock is 197. That's why they keep trying to hold it down, because pretty soon that whole trade will be in the red. It doesn't even pay to be short anymore. You know, pretty soon, let's say another couple of months go by, the most they can make is $2. Then it goes to 180, 170. It doesn't even pay. So the trade is a moronic trade, is what I'm trying to tell you. Just based on the price and the expense to carry this position. I hope everyone understands that.
So what would happen, just for example, my theory, if in the fourth quarter, I know it's longer than everybody wants to wait, but let's say the fourth quarter of finger motion, which is the end, it ends in February 29th or 28th. So I guess it could be reported as late as 45 days later. So let's just be extreme. Let's say May 15th, they report it, and wow, they're in the positive on earnings, and earnings, there's going to be blue skies for the next decade. What if the finger motion starts trading at $3, $3.20, let's say, or $4.20? What happens
Well,
to those
it's easy.
shorts at 220?
It's easy. Everybody on this phone call, make believe you're short 1.6 million shares at $2. And the stock is 3. You're down 1.6 million now. The most you can make is 3.4, $2 times 1.6, right?
Right.
The most you can make is 3.4. The
Right.
stock's up at $1, so you're down 1.6 million. If the stock goes to 4, you're down to 3.4 million now. It trades upside down, and it's still costing you money to stay.
And you have the risk it keeps going up.
Of course.
Yeah.
So if you were short at $2 and the stock is trading at 3 and the company's profitable, how long before you say, screw this, I got to get the hell out of here? And the answer is everybody would cover it in a minute because it's a moronic trade. The only person that's short that stock with that position is someone that's tied to a fraud, and that would be Jeff Easton. They're only here because the naked short.
Would you do business with Gateway? Sorry, not Gateway, with Benchmark if you were a CEO?
No, you got to be, if you just do 3 seconds of searching, you would understand that everything they do is just destroyed.
Right.
But CEOs are all idiots. They think the world is flat and everything's okay. They don't know. I told you.
They're probably just uneducated, not idiots.
I met with a guy, the CEO is CELU. He's a neurosurgeon in a trauma center, a trauma unit in New York. And he's working on infectious disease. They were a spinoff from Biogen. That was a real company, a real spinoff. He took money from Yorkville. The stock got killed. They reversed it, and then they killed it again. So here's a guy who's brilliant, a guy you respect, a guy that can save your life, and he has no fucking clue what Wall Street's doing to him. And I told you when he did it, stay away from the stock was 90 cents, and he drove it down to 12 cents. They reversed it again, and now it's just a complete death spiral mess. And that's someone who can save your life. Think about that.
Yeah.
That's how destructive it is. These guys are sitting here with a vision. Their vision is, I want to save people. And the short sellers destroy companies that want to save people. Think about that. They could care. They don't care.
Yeah.
Could kill us. And they take advantage of these guys.
So
whoever the CEO of K&W is, working on something for diabetes, he may be a great man, may have a great product. Lynn Poitras doesn't care. Steal money. That's all they care about.
So Keith wants to know, did you talk about DJT?
Not yet. I'm working towards it.
Okay.
We wanted to go over the whole naked short selling.
Yeah, okay, that's fine.
And the finances behind these transactions. It's not like they just sell it and and they're sitting here and it's a free ride. These guys have got pressure, and Wall Street melting up is putting pressure on everybody on the street who's lending money to the criminals. When you lend money to the criminals, think of it like I'll go back in the old days, like a bookmaker. If you're borrowing money from a bookmaker, he's giving you leverage to gamble. And as you start to lose, they keep raising the rates on you. Well, that's what happens on Wall Street. They raise the rates on these guys. It's the same thing. Everybody's here to make money. No one's your friend, so get over it. Jeff Easton, he can sit there and tell them I'm the best client in the world. If there's no money to lend, or the rate to borrow the money to lend, so they can continue to short is so high, it eats them alive. It doesn't pay to be there. So these guys have a lot of problems going on. All right. So does everybody understand that? I hope you do.
So. And the key thing is it's not free. They can't sell endless amount of, If the price keeps going down, I guess they can.
Well, the only reason they went to a real short is because they're finding it hard to sneak in the naked short every day. They're doing there's a lot of moving going on, trying to hide those trades from people looking for delivery. Okay? Believe it or not,
Ultra, Greg Thorne.
to deliver. I'm sure the regulators are on people, and it's being closely it's being monitored a lot more. Don't get me wrong, they haven't forced them to cover yet. I got it, but there's been a lot of short squeezes from weird places, and things are happening. They haven't happened for us yet, but they have happened. And this pressure. Just go on Twitter. Everybody's screaming. Twitter's the most, viewed news source, and everybody's talking about naked short selling on here. The stock market is complete fraud. Everybody says it's not just me. Everybody's saying it. So the pressure's out there. Since most of you came on board, the head of enforcement quit the SEC. The head of the SEC is quit. The pressure is mounting. No one wants to have this, as we call it, a political hand grenade that you're going to have to go in front of Congress or whoever and say, hey, we know the whole market's counterfeited, but we chose not to do anything. Someone's going to have to answer to this question sooner or later. And like I said, the MMTO people are putting a lot of pressure on people in D.C. And, like I said, we have to support them because they help us out. We can't help them financially, but, I'm with them in their fight. All right. Now remember, the real short, no one ever followed it, and I've been calculating it since it popped up. I've always watched it, and always reported on it. So we can see the real short is going to be the first guy to panic. Keep an eye on him. That data is coming out tonight. They bought 100,000 back last 10 days ago. Let's see what they do tonight. If they move the real short keeps covering, then look for the naked short to panic shortly right afterwards. They're basically showing you cards. If you were playing poker, you know what they're doing. It's right there. And I posted for you. I can't tell what the back office is going to do. I can't tell what the regulators do, but I can see what the traders are doing, what Jeff Easton is doing. It's easy to see. You can't hide it. Real shorts are reported, and that's why we can see it. You can't say a naked short is covering. We can't say that. And number one, you can sit there and say, well, there's no data to prove that he's not covering. Yes, there is. The data is that we watch the trades every day. It's traded 60,000 shares. Where the fuck are they covering? They're not covering. It's in the volume. We don't have the volume, so they're not covering. And that's what we report on that all the time. So they're basically, we can see whether they're covering, whether they're naughty or nice. We can see it. Right? It's right there. Again, this game is about numbers, and the numbers are going against them really fast. If the regulators come in and turn the valve off and they can't naked short one more share, it'll be over within seconds. And that's the life-changing trade we're looking for. Now, you sit there and say, well, what if the regulators are not going to do anything? Well, the company's doing something. Jeff Easton and his buddies tried to knock this company out, but they haven't succeeded. In KNW, in 6 months that I've been following it, they already knocked it out. They knocked it from 90 to 18 cents. All their buddies have diluted the company, got free warrants already, and now turned that company into a shit show. Their market cap has been totally fucked up by the criminals. Do you see the difference? They got them. They haven't gotten finger motion. Finger motion has trapped them. Do you understand that, William?
I do.
So once they get a hold of your market cap and start issuing shares and warrants, that's when you're fucking dead. And finger motion hasn't done that K&W has got raped and murdered within 6 months. And gonna do the same thing in GMGI. Just like they murdered SYTA. The high was $90 equivalent. It's now worth 90 cents. That's how they rape and murder companies. They don't put you to zero. They destroy your market cap. That's their game. If you go to zero, then you help them out even more. But for the most part, they just want to just destroy the market cap. You had a company with 30 million shares, now you got 130 million. Before you know it, you got 200 million shares. Then you have to reverse the stock because you don't make the, like K&W is going to be delisted because it's 20 cents, it's got to maintain $1, right? If it doesn't maintain $1, they get delisted. That's what happens.
Mm-hmm.
Now the company has outlasted all the attacks, and now the company's fundamentals are going to start kicking in. So we, like the CEO said, he believes that profitability is right here. So we're right at the door, and the company survived the attacks. And to make matters worse, the company decided to give out a special dividend because the company, like me, doesn't trust anybody. We didn't know Trump was going to win. We didn't know all this stuff was going to happen. So now we have a new president, a new SEC chairman. We have a new FBI director. We have a new head of the DOJ. And they're all on our team. The shorts never counted on that. Maybe that's why the market's rallying. All the thieves and scoundrels who have legal trades on are saying, fuck this, I'm covering. And that leads us to DJT. Why aren't they covering here? Well, I think that the people that are short DJT know they have a massive problem. And it's very difficult, people, to go in the other room and go kill yourself. Because that's what we're asking them to do. We're asking short sellers that are well-known and trapped, hey, we all know, go in the other room and kill yourself. That's what's going on here. And we're just waiting for someone to go commit suicide. Suicide means if they start buying it in, they're going to lose billions of dollars. And when you lose billions of dollars, people go to jail. That's where we're at right now. I'm just taking a sip of my club soda. Excuse me.
I bet it's champagne.
With finger motion, it is following DJT because obviously DJT has the president, the DOJ, the FBI, and Devin Nunes. And that leads me to my call last night, which I happened to post up there, William, and I don't really discuss it with you. But a gentleman that is very close to DJT reached out to me, and he's going to have me sit down with someone who is a board of director, a very important person in DJT. They're traveling right now, but they're going to set up a call with me to explain naked short selling and things they could do. And I will be having that call with them as soon as they call me back. I spoke with them, my contact last night. I sent William the text message. I showed a few people the text message that began the conversation. And I will feed you after I speak with them. And I will make sure that DJT knows all about FNGR and their special dividend and the many ways that DJT can attack the same thing and put more pressure on these guys. In case Trump doesn't want to get the SEC to do what they have to do, I don't know why not, but I'm not there, so I can't tell you that. I'm going to show them what the peasants are going to do. We're going to attack them and force the issue like we know how to do. Since we're not the president, we don't control the SEC, DOJ, or FBI. So we had to figure out a way to do it ourselves, like Pat Byrne did. We figured out a way. Any questions on that, anyone?
Do you think they might ban short selling to fix the market?
No. We don't need to ban short. I believe in that short selling should be banned. Me, I do. Even Elon Musk says it all the time. It's it's a scam. We all agree on that.
Is it possible to cover the real short little by little like they're doing? What happens if there's no real short in the end?
Is it possible? So they're short 1.6 million.
Right.
We're going to see tonight what they've done. I haven't seen 1.6 million shares trade, so obviously they haven't covered, right?
Right.
Do you actually think that I post every day that there's no selling? How are they covering? The only way they're covering is the naked short's getting bigger, right?
Yeah.
So what they're doing is Jeff Easton's, his mom is the real short. She's covering because he doesn't want to throw his mom in jail too, right?
Right.
So he's taking that liability from his mom. He's taking it as a nice boy. He's such a good boy.
My son, the short seller.
Oh, he's protected me. He took my short position. I wind up making 30 cents on it because he's such a good boy. And meanwhile, he took that 1.6 million, he put it in his naked short fund offshore, and when it gets busted, he loses all the money. I'm okay. I think when the dust settles on this thing, the person that's short 1.6 million will get exposed also. I think it's pretty easy to know they're part of the crime family, whoever it is.
If everybody bought 100 shares of Finger on the same day, would that move it?
Nah. You don't remember we were buying 600,000, 700,000 to 7. They were blasting it. I had some big boys put away.
So would you call that price discovery?
Yeah. There is no price discovery. It's just make believe. Listen, it's pretty easy. For anybody on this call that's going to say the next stupid thing, which is, why don't they just drive it to zero? They're going to win. It's because they can't. They're choking. They don't want to sell it less and less.
Which institution is giving these guys the fraudulent shares?
What do you mean giving them? There is no fraudulent shares. They're making them themselves. They're using a market maker exemption. That's all it is. That's the loophole.
Why are they still giving out naked shorts if they know we're getting a new SEC chairman?
Well, I just told you. For the person who just said that, just go in the other room and say, you know what, I got to go blow my brains out right now, or else I'm going to jail. What would you do? I don't mean to go do that. I'm just trying to tell you that's what they're faced with right now. If you were the short seller, what would you do? You talk to your partner and say, hey, if we start buying this thing, it's going to go to the moon. We're going to lose billions of dollars, and the feds are going to come put us in jail for 20 years. What are we going to do? Keep doing it. Maybe people will give up. Let's go on William's call and let's be negative and call these two guys jerk-offs for reporting what they see. That's what they do. And I would do the same thing. I would say the same thing. Oh, these guys are clowns. They're never right. The stock goes down every day. They're full of shit. I would say the same thing. We all know that they're manipulating the stock. That's why it goes down, using an illegal practice to do so. We all know that. And it's getting close to where they're going to have to pay the piper. So there you go. So the race is on.
Are the brokers offshore as well?
They have, yeah, I reported on a broker offshore. I forgot who was naked shorting. I forgot the name. Black Tower? Maybe, is that what the name was?
I wrote it down, but I can't find it quickly.
I think it was called Black Tower out of the Caymans. I heard they were shorting GameStop. I posted that up there for everybody.
Is it pot? Oh, I already asked that one.
Is it what?
I already asked that question. I stopped in the middle. Matthew says the daily Bollinger Band is squeezing, so finger motion is set up for a big move in one direction or the other, and he thinks it's likely to snap back. Now, in other words, go up. Will a finger short squeeze happen during normal market hours, or will it happen pre-market or after hours?
I really don't think we're tied to algorithms, so I don't know. That's a good question. I don't know. But you know what? You got to pay attention.
What is an algorithm as it relates to trading?
Well, they have a computer program on, and this is how they do it. You ready?
Yeah.
I sat there with a guy who was a high frequency trader many years ago. They just, it's like a dial. They basically, we're going to short 10 shares and we're going to buy back 2 shares. So the net effect is they're going to be short 8 more shares, right?
Okay.
And that weight of the 8 shares will push the stock down, right? Because the buying can only absorb so much. And that's what they do. I think in a stock like Root, R-O-O-T, when the stock was 40, the stock exploded, and I pointed out there was no volume. It was trading up $40 on 200,000 shares. Tells me they turned off this sell button, and it was buy 10 shares and sell no shares. So when they turn off the sell button, look what happens. It went up 40. It wound up going to 120 on 500,000 shares, or maybe 1 million shares. It was up $80.
So do they adjust that ratio during the day, or?
Yes, they do it all the time. Yes. Yeah. So, for example, GameStop was going up towards 30. With the switch on.
We didn't hear you. We didn't hear you.
I said in GameStop, when it approached 30, they could have went out there and said, sell 10 shares, buy none. It goes right back down, right?
Okay.
DJ gets to 36, they sell 10 and buy 2. When it was going towards 36, they were buying 9, selling 1, something like that, because it was going up, right?
Yeah.
DJ looks like when it gets to 35, they buy more shares and sell less, and it bounces back up. That's what you have to look for. Those type of that. I can't tell exactly what they're doing, but that's how it works.
Why are institutions continuing to sell fraudulent shares when you see new leadership coming?
It's called they think they're too big to fail. They're all trapped, and now what do you do?
Is the next question from Brian to ask you is Citadel or Virtue, are they too big to fail?
No. Donald Trump knows it. He makes fun of Ken Griffin a few times. You've seen the video. Virtue is going to be pennies. Citadel's not a public company, but Virtue is. I think the brokerage firms all got squeezed up on Trump, and I think that helps them raise money, because when they catch a beating, those stocks will all be cut in half. Instead of being cut in half from $30 down, they're being cut in half from $75 down to $35, right? Mm-hmm. So that saves the brokerage firms.
This question doesn't have a reference, but let's say Finger or let's say DJT are long selling.
Long selling is a great question. How many times can you sell a stock? William?
Well, in my case, I don't own any DJT, so I can't sell any. But I can only sell once.
One time. So if you are a seller and you sold, let's say yesterday, Yesterday we traded 300,000 shares. And I just happened to watch it. So either A, we had a long seller that wanted to sell, you know, in the beginning, I posted it last night, it was 120,000 shares. They sold it in 15 minutes. Think how lucky he was. He wanted to sell 120,000 shares in 15 minutes, and there happened to be a buyer straight there for the exact amount. Isn't that crazy? Is that unbelievable? The seller and the buyer both knew to meet at the same time around $1.97 yesterday, whatever it was, right?
Mm-hmm.
And after that little volume spurt from 12 o'clock yesterday to 4 o'clock in the afternoon, zero happened. Maybe 2,000 shares traded. There was one other, there were two other like 20 or 30,000 crosses that happened. And then they crossed them after the close. So it's funny that the stock had 7 big trades and then nothing the rest of the day. So if it was a long seller, it looks like today he's finished, right? What's the volume? 60,000, 70,000 shares? I forgot what you said.
Yeah, I can look. I just gotta, I'm using a different platform. I just gotta type it in. And
it's 7,000. So if you're a long seller, you sold it and you're done. Take it easy, good luck. Don't let the door hit you on the way out.
77,057.
So if you're a long seller, you're done. Okay, that answers the question. If it's a long seller, everyone's in. If you give up, you can give up. There was a gentleman the other day who came on this call and said, fuck you guys. I'm buying XRP. He traded it, he bought it up to what? $253? I'm selling my finger. Fuck you, he said. I said, hey, do what you got to do. Where's XRP today, William? $2?
Let me see.
Finger motion's in the same spot, and that gentleman gave up on the story because he wanted to jump into the next story. And it's all of a sudden.
I don't know where it is.
Well, congratulations to that guy the other day. And believe me, that happens to a lot of people. I'm not picking on them. I'm just trying to show you that does happen a lot.
We all go through it. I've noticed it with investors and clients and myself. We get internally, we get so frustrated. We just want to do something. I want to get it done. And then it feels good for a day. You actually took action. But if you do it without thinking it through, it might be the wrong thing to do.
I told you my friend sold 187,000 Hershey last week. And it was up there. It was up $30.
I've done it.
He gave up on this story, and it went up $30. Happens to everybody.
My worst thing I do is I don't sell when I should. But anyway.
Well, William, if you listen to this phone call, I was on with William, and I had 6 people sell XRP into the hype up to $3. I made them sell half of it, and they had a free shot then.
Yep.
They didn't want to sell because they believed it was going to whatever. So I said, sell half. You must sell half. And they did. So now they have a free shot, or if they like, if they sold it at $2.60, they could buy it back at $1.90, and you know what? And do it that way, and they can get back into it. But at least they did something.
And they could always buy back or put it somewhere else.
But they did something. They didn't stand there like the Statue of Liberty.
Like me.
But anyway, I'd like to thank that guy for telling us about that. He jumped into XRP because he was very nice to set a top for it, and I congratulate him on that.
He's not, whoever you are, he's not picking on you. It always happens.
This is an example.
It always happens.
And everybody does it. I'm just trying to show you. It's great that he was nice enough to come out here and jump on the sword for us. It was very nice.
Is it worse for the shorts if the rice closes high at the high at 4 o'clock or after hours at 8 o'clock. Obviously,
Well,
he means price.
Listen, if I was in the business of stock manipulation, I would tell everybody on this call, everybody buy 2,000 shares using a $2.40 term and put the order in at $3.59.
Right.
And the stock will close at $2.50, $2.60. But I'm not in that business. I don't want the SEC knocking on my door.
Right.
But that's the kind of stuff they were doing in GameStop to squeeze the shorts. In case you didn't realize that, everybody. That's what the big boys did. That's what the big boys were doing, so you know.
Do you think if either one squeezes that they will have halts?
Will they have
Halts.
Oh.
Halts. He wrote halts like.
Yeah.
I don't know.
I think there'll be halts in DJT. Trump has been yelling about that. Devin's been yelling about these halts. So, if we get new sheriffs in town, I think that the regulators have to be very careful about what they're doing.
Right.
Because they can be held accountable.
What about NASDAQ allowing naked shorts to dilute stock? Somebody has to be responsible.
Oh, they all belong in jail. And the woman's name at the NASDAQ.
Adina Friedman, she's a joke.
The lady at the NASDAQ, who my friend used to speak to, Yvonne Hubler. She's the head of short regulations at the NASDAQ. Screaming at her for 15 years. I forgot her assistant's name, but he's a guy, and they both of them, they're people who pounded these people. They're a disgrace. Yvonne Hubler.
I don't have much.
I don't know how these regulators go. I don't know how they go home at night knowing that everyone's just getting robbed.
They have nice houses, nice cars, and great friends, and their daughters go to the best schools. What should they worry about?
That's what they do.
They're special. Do you think
Tesla 20 today, huh?
Tesla's at 20?
Up 20 up to $400 again. He keeps killing them.
He's going to do an IPO of some kind. Do you think DJT is set to squeeze before Finger?
I will say it again. I can't believe they haven't squeezed it yet.
DJT.
I can't believe it.
So this guy's trying to figure it out. Would you put money with DJT hoping it runs and then buy Finger?
Again, it's a tough call. It's very, how are you going to put money with it? What are you going to buy, 100 shares? Or are you going to buy 50,000 shares? Or are you going to buy calls? You could buy calls in DJT and the stock could not squeeze. Your calls can expire, then go. It's a $35 stock. That's for the lifestyles and the rich and famous to buy a $35 stock.
Robin Leach.
Right. It's not easy. If you tell me you're going to go out and buy 100,000 DJT, I would sit there and say, you know what? That's the place to be. I would buy 100,000 shares of it. If you said I'm going to buy the calls for next week, is it going to squeeze by next week? I don't know. So you can go out there and spend, $50,000 on options and go to zero.
So at least with Finger, it's not going to expire worthless.
Emotion is an option that doesn't expire. That is correct.
So if the real short squeeze point is 225, what stops them from pushing it lower, pushing it Finger down more if the strike price gets lower?
Well, it's a great question. Number one, the company is going to give out a special dividend. So the more they lower, the more they sell, the more short they're going to be, whether they like it or not. And number two, Trump's coming in with the SEC, and there's potentially regulations that are going to change to squeeze them more. So do you want to keep putting your head in the rat trap, or you want to just, they're stopping for a reason? People tell me DJT is a garbage company, fundamentals, no revenue, blah, 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 right? And I say to them all the time, hey man, just settle the trades. Let's see how it works.
Exactly.
And I think that DJT is going to use that same mentality. Hey, forget about our fundamentals. We're a public company. We want the trades to settle. And you got the FBI, DOJ, the president, and Devin Nunes all saying the same thing. They just can't say it for DJT. They got to say it for all the stocks.
The downward pressure on finger has to stop at some point. It can't go to zero. Is that correct?
That is correct. If they thought they could get it to zero, what are they waiting for? Help yourself, right?
Well, I think they tried, but you outwitted them. If it's only the market maker exemption, it should be easy to stop.
That is correct. That's the whole game right there. And the market maker exemption, so you know, do you know how many market makers are left in this world? Not many. And I posted the loophole. If anyone wants to repost it, I put it up on Twitter 1,000 times. The loophole is the market maker exemption, and the Tom Gira, G-I-R-A, in the article from 2007, I think it is, it was a comment for 2007, he's quoted saying that they were concerned that hedge funds would all sign up to be market makers to get the exemption. Well, guess what they did? They all signed up to get the exemption.
They even bought defunct symbols of firms, old firms.
Right. So Wedbush figured out a way that they can lease out their license,
right,
their market maker exemption, to any hedge fund in the world as long as you pay them a fee. So Wedbush is saying, hey man, get every hedge fund in the world, wherever you are, do business with us, pay us a fee, and you can rape, pillage, and plunge all you want.
Swell.
And Wedbush is supposed to monitor them. And what have they done? They get busted for not monitoring the crooks.
Swell.
So they pay a couple $1 million fine. And they just keep making, imagine you paying $50,000 a month to use the market maker exemption. I would pay it. I could steal $300,000 a month, give Wedbush 50 as the mob, right? Protection, and walk away making $250, right?
Trump just made an announcement that anyone investing $1 billion in a company will get permits and all the necessary paperwork expedited. Not sure which industry, but maybe all industries. David put that up.
Okay. Well, they're trying to make it easy and stop all the crazy paperwork that they drag it down. All these lazy people.
Well, you need to make sure there's more fairness in the executive suite. We're happy with bricklayers all being men, but let's sort out that C-suite. Finger dividend is next week. I don't know about that, but I think the audit will be finished next week.
Listen, the CEO
the projection is by the middle of December. It might take longer.
Listen, it could take longer, but we need the CEO to get out there in a statement saying, hey, it's on the tape, the dividend's in play, it's coming. That's it. That's all we need him to say. Because everyone's saying we doubt the CEO's doing it, he's not going to do it, but what are the terms? He's going to give it to us by the middle of December as soon as the audit's complete. I don't think he would have said the middle of December if the auditors didn't tell him they'd be ready by then.
How high can Finger go and how high can DJT go in a short squeeze?
I think DJT, I'll say $500, and the reason is because their shareholder base isn't educated.
Okay.
And you'll say to me, well, what's going on? I think the shorts, I think the longs in HKD that went to 2,500 knew exactly what was going on. I think the longs in the Volkswagen short squeeze knew exactly what was going to happen. when they did that deal with Porsche.
Right.
So the longs were educated. DJT, I seem like I'm the only person talking about it on Twitter. It's me, and I don't even own it. I have zero conversations with people asking questions about DJT. Zero. And how many times do I post a day? 800 times a day?
More importantly, how many times a day do people read what you post?
If you're reading what I'm posting, then you're hitting the bottle.
Could finger squeeze on the dividend warrant news before January 20th?
Yes, yes. I believe, my opinion is that when he puts it in writing and everyone sees it, knows the dates and the calculations, that's when the shit hits the fan. But it could happen in 2 seconds. Trump could come out and say, hey, besides anybody putting $1 billion into a company, we want to make sure stocks settle. Boom, everything explodes. Why is Trump helping everybody but himself?
Because he just looks out for himself? Oh.
He's supposed to be a greedy, hungry, whatever, right? I don't see that.
Does the finger dividend affect just the news symbol or also finger? So in other words, will the finger warrant go up as well as finger the stock, or just one of them?
Well, if you bought let's say you bought the 35 calls in DJT and you paid 50 cents for them, and the stock goes to $50, your $35 call is going to be worth $15, right?
Right.
$15 minus the 50 cents you paid, you would make $14.50. That's what the warrant is, the same thing.
Yeah. Does the finger dividend, oh, I already read that. It was printed twice. If you're caught in a trap all the way to your neck, pulling out of that trap may not yield the desirable result.
I didn't understand that, William. Say it again.
If you were caught in a trap all the way up to your neck, pulling out of that trap may not yield the desired result. I don't know.
Okay.
It's
is that the Riddler from Batman? Who the hell is that?
Have you ever danced?
English, what you want me to understand?
Have you ever danced with the devil by the light?
Listen, all these guys have been looting, and no one stopped them. Now we have a new sheriff in town, a new president, new DOJ, new FBI, and Devin Nunes. They can't help DJT without helping us. That's all you need to know. And if they're not going to help us, Finger's doing it by themselves.
I agree with you, Scott. I got your expression. Ham didn't, because Ham was reading a text at the same time as listening. Fingermation may work because of good fundamentals. I think that's true.
Listen, I just told you, these guys had the opportunity to wipe this company out before it's got all these new opportunities, right?
Right.
But they weren't able to knock it out. Now the company has the fundamentals to support the stock price going forward. Very different.
Yeah.
K&W is working on a diabetes product. The stock was 90 cents. They signed the deal. They were going to use the money to expand their research. Means they weren't there yet. Boom, the stock got crushed. They diluted the shit out of it already. It's only going to get worse. And now you got a 20-cent stock. Where you going? That's the difference. Northwest Bio got raped. Has 1 billion shares now. It's a $28 stock. it could have the cure for cancer. I hope it does. But the fundamentals have gotten, I mean, the market cap of the company's gotten destroyed over the years.
Well, and more than that, in the example you gave of KNW, if KNW ever needs money again, they're only going to go back to the pimp and destroy shares.
What's left?
But in the case of Finger's never going back to Jeff Easton.
Nope. And I'm trying to help people to understand what Jeff Easton's about. I don't know the guy. Give it a break, you fat bastard. Stop stealing. They're killing people. Go away. But they're so trapped. They're so used to stealing. And look where the money goes. It goes to the guy in Australia. He's up 220%. So as far as I see, Jeff Easton's helping steal money from the U.S. investors and parking it overseas. How come no one's looking into this? It's right there. The guy's bragging about it in the Australian newspaper.
Go ahead.
I'm just saying, if no one's going to stop this, we should we go to the Caymans, open up a hedge fund, and fucking do it ourselves. It's so easy to do.
I think you've got to have a protector.
You think before we can get into the game, we need someone to introduce us?
You need a Cohen or a Griffin or a Bloomfeld or a...
Listen, there's plenty of small thieves. We'll find somebody.
Can they drive Finger below $1 to get it delisted? That's their goal.
Their clock has run out. I told you that 20 times. Listen, the dividend stops the music and we get to add up the loans. That's what's coming up. And I just told you I'm going to have a call with a very important person at DJT highlighting exactly what I just told you. I'm going to make sure they know about Finger Motion's dividend and what's going on. And who's involved in DJT? Oh my God. The FBI, the DOJ, the President of the United States. Do you think Donald Trump wants to have his stock under attack every day? Well, I don't think he does. I don't think Devin Nunes wants it either. You think Devin Nunes wants to go to work every day and listen to people ask about naked short selling, what's going on with his company? Why is the stock going down? You don't think they have friends who bought the stock? You don't think friends of President Trump are buying the stock? We're anticipating if he's going to win and his stock is going to go to the moon? The only stocks that went up when he won were Goldman Sachs, Jefferies, JP Morgan, Morgan Stanley. Those stocks went up and his stock has done nothing. I don't know about you, but President Trump is about protecting his family and friends also, so he has every right to.
Do you know anything? I don't know what I'm talking about here. Do you know anything of Equiland? They put out naked shorts. Equiland was turned off when DWAC took an off day in January 2024. SPAC for DJT. If that rings a bell, you can answer it. If not, I don't know.
I don't remember. I don't know. I don't want to say. I would be guessing. I don't know.
Will the warrant be counterfeited?
They can do it again. Let me explain the warrant. These guys are going to be short 10% of their short position day one, whether they like it or not. The warrant is a 2-year warrant. So if they want to counterfeit it down to 10 cents, we'll just keep buying it because eventually the stock is going to go up based on fundamentals of stock settlement. They would be committing suicide tenfold doing that. And remember, every 10 cents, if they're short 230 million, they're going to be short 23 million. They're going to be short 23 million warrants at the cost basis of 0. Every 10 cents up, it loses 20. They lose 2.3 million from doing nothing. They don't have to do anything. They're going to lose 2.3 million. On top of that, they're going to have to put margin money up because you have to protect that short position of 23 million. So if you're a prime broker and say, hey, you're short 23 million warrants now, you got to put up $3 a share. And your piece is going to say, come on, give me a break. I'll make it $2.50. But you got to put the money up. So the snap of a finger, he's going to have to put up $50 million of margin money. And let's say it opens at 50 cents. He's going to be down what? $10 million in losses out of the gate. So $60, $70 million in losses day one. So he can counterfeit all he wants. It doesn't make a difference. And add into the fact that Trump and the FBI, DOJ, Devin Nunes, in any second could come out with a statement about making short sellers go into jail, right? Or right behind that, the company's fundamentals will be kicking in. So as far as I look at it, it's just getting worse.
Okay. Pete is going to find that article regarding Equiland.
Yeah, put it up on Twitter. I'll read it later.
It's part of this thing Nunes is using in DJT. Pete has been following DWAC/DJT since.
I remember when it was the DWAC, when it went public, it went up to $243, right?
Well, he's saying since October 21. So I don't know.
My friend sold the stock at 243. He rang the bell. He was right at the top.
Wow.
Yeah.
You can ring my bell.
Hey, William, your NIXX is 474. It looks like that's ready to melt up, too.
Yeah, that looks stronger than a vampire in. Hey, I don't know.
So if you listened to me this morning, I said, DJT, what are you going to do? Sell the rip. You had your chance already, right? Now it's back to 34, 50, or 60. Buy the dip, and you do it again. There you go.
Well, the one you just mentioned has basically doubled, and it's probably nothing goes straight up. I don't know. Yeah. Anyway, I don't know what else to ask you.
William, can you give me a quote on that small stock I own, that GBUX?
What's the symbol?
GBUX.
Oh, G-Bucks.
I paid 75 cents for 10,000 shares.
Oh, you're a genius because it's 85 cents today.
Very
84
nice.
bid to 88 ask, which shows it's going up, I think. The volume is 5,000 shares.
Thank you very much. What that shows me is that the thieves and scoundrels aren't around the stock, which is good news. And when the fundamentals kick in, like I'm told they're gonna, let's see what happens. I think
you're up $700 today.
That's fantastic. I don't look at it. I was told, 2025 it's going to be explosive, so I'll just wait it out. And that's it. Am I correct? Am I good?
Yeah, I think you're good. I'm going to look at Hershey.
Did I address the naked short, the whole thing about it?
You addressed naked shorting.
These guys trapped themselves, and they didn't really trap themselves. They were just doing what they normally do, is just stealing. The system has changed on them overnight. Now what do you do? Besides us figuring it out, the system is now changed in our favor. If you said to me 10 years ago, hang in there, the president, the FBI, the DOJ, and Devin Nunes, the head of the, he was head of the Intel committee, would all be talking about naked short sellers, I would have said, oh my goodness, I can't wait. Well, it happened. They're all here. And the only reason everybody's got some doubt in their mind is it hasn't happened in 30 seconds. But if they spoke about it, it's going to happen. They're gonna clean it up. Maybe we should buy that guy Dirty Doug, the CEO of VIRT's hockey team, when he goes broke.
Let Stevie Cohen buy the hockey team.
He's a baseball guy.
He's as crooked as the rest of them, in my opinion.
That's not true. You can't say that about Stevie Cohen. You act like he had all inside information. That's how he got so powerful. And he was just a small guy working at Gruntle on 40-foot wall.
Gruntle, the premier firm on Wall Street, hiring only the best.
Prestigious firm. He had a small office. My friend was his secretary. He was straight. He shit bases. Imagine playing poker and you could see everybody's cards.
Yeah. You didn't say how high finger could go in a squeeze.
I think finger motion could be worth thousands of dollars. Just look at some of these stocks go from $2 to hundreds, and no one knows anything about them. We know everything about it. We discuss it every day, from fundamentals to dividends to short squeeze, blah 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 blah. We've been discussing it. Everyone who's in this stock understands it. People in HKD didn't know anything. I think the group that was behind it knew everything, but shareholders didn't know. If you bought 1,000 shares of HKD at 50, guaranteed you sold it at 70, and it went to 2,500. Just imagine if you owned 1,000 shares at 50 and you sold 200 at 70, 200 at 100, 200 at 300, and you held on to 400 and you sold it at 2,000. That means you're educated. That's what I see in finger motion. I don't see that in other names. Christian Shaughnessy knows about it. The Pete from Philly understands it. Everybody understands it. Everybody knows the same story in finger motion. And the data and the news all shows you that it's right on the nose. The only thing we're missing is when they're going to carry these criminals out. And MMTLP is playing a crucial part in this thing, in my opinion, because they're making a lot of noise in DC. And you know what? They've done great work keeping it alive, keeping it, not letting the name disappear. And you know what? You just support them. When they post something on Twitter, just retweet it. It doesn't hurt you. They're helping everybody. All they want to do is get the share count. How come no one can tell them what the share count is? What's going on? And remember, it's like candy carrying when you least expect it.
Hey, Kai. I know you're.
All right.
We're
good. I'm going to go into the store and get what I have to do and then go home.
Can you tell which institutions are buying in finger?
Can I tell you?
Do you know?
I have an idea of some people that are buying it. I don't think they want me to tell you. I know a lot of prominent people that manage a lot of money that put it in their personal accounts. And once the game begins, as long as they owned it for a long time, they have no problem buying it in their funds later on, right?
Right.
They can't buy it today and buy it in their fund tomorrow, but if they bought it in the personal account 6 months ago, a year ago, and it's already out there that their funds know they own the stock personally, they can do anything they want.
Right.
Everybody loves a short squeeze. It's the best business plan in the world. Look at all the people that got rich off of GameStop, right?
Yeah.
AMC, they're still standing around. They still want more. Those companies are selling 50 million, 100 million shares. They're raising all the money they can. Give up on it already. I know you want more squeeze out of it. You know, if you're even, break even, move away, go find something else. Life is too short to keep fighting this battle. Find something that you can, you believe the risk is limited and the upside is unlimited. That's what I like to look for. And remember, I'm having a call with someone who's a board of director of DJT, a very powerful person. It's going to be set up, and I'll let you know how it goes when I'm done with it. And I have some wonderful ideas for the president, for Devin Nunes, and everybody else involved. And I
Remember to call the president, sir.
Is that what I'm supposed to say? If I show up, they're going to give me a jacket, I'll be serving tables, William.
You'd be good at that.
You know what? Me and you are going to become the testers of their food, like in the old Roman days. We're going to have to test the food.
You'd be good at serving tables.
No, we're going to test the food. They're going to bring
no hair would fall in the soup.
Before they serve everybody, they're going to make us test the food. Test the soup, William. Listen, another day's gone by, and we're getting closer
to death.
I listened to what the CEO said. He said mid-December. I have no reason not to believe it's going to come around that time. I'm not going to hold him to, December 15th and a half or December 16th. He said around then, there's the auditors involved. As long as they're going to do it, we are going to win. That's all we need to do. And I think people at the company are sick of this. I think everyone is sick of naked short selling, and I think that we'll be okay. That's all I can say. All right, I'm gonna run. Have a great day.
Thank you.
You got it.
Call ended.
All right. I'll try to do two more things, but I'm going to give you, and you can ask questions, and I'll try to pay attention. My eyesight ain't the best. It ain't. It ain't the best. It's going to get better. It's going to get better all the time. I used to be mad at my woman, I beat her. But I've got to admit, it's getting better all the time. All right, so the gold rally is not over yet. 5 reasons. And by the way, it didn't end. It didn't end when Donald Trump was elected. So for the first 9 months of this year. In euros, gold was up almost 30%. In dollars, it was up almost 30%. In euros, almost 30%. And Swiss francs, for those of you who own Swiss francs. By the end of September, gold was up 40%, 35, and 31. Has gold therefore reached its ceiling? Or is it in a bubble? Here's, I guess, one of his reasons. Adjusted for inflation, gold is not yet at its all-time high. Since December 23 in US dollars, the gold price has been chasing one all-time high after another. It's hard now to imagine that gold failed to break through $2,000 US for 4 years, considering it has since risen by over 30%. However, adjusted for inflation, the end of the month of October gold price is still below the record level set in US dollars of $2,646 in January of 1980. In other words, adjusted for inflation, the previous all-time high in gold, when adjusted for inflation, was in 1980 at $2,646. So there are concerns that we might be in the rarefied air with these prices. The rise in gold prices since 2000 have been moderate as compared to the rally in 1980. Here's the chart. Let me make sure you can see it. You can see it. Here in 1980, gold peaked at $2,646 when adjusted for inflation. You had in 1971, the president said nix on that as relates to the convertibility of the US dollar into gold. And gold went from $35 an ounce and rallied. Then it pulled back with whip inflation now, Gerald Ford and Jimmy Carter. And then it started to rally into just before Ronald Reagan became president. I think once he was elected, that probably capped it out. Either way, it was probably more attributable to Paul Volcker, who was put into the Fed by Jimmy Carter, but Ronald Reagan got the credit. In some ways, maybe that's fair because Volcker raised interest rates. There was a massive recession leading up to 82 when Reagan came in. And then Volcker raised interest rates, but Reagan also got tax legislation passed. So it might be fair to give him credit. But anyway, so gold hit an inflation-adjusted high of $2,646 an ounce in 1980. You had Volcker destroy inflation with high interest rates, and the gold price plummeted back down to an inflation-adjusted $1,000 an ounce during the Reagan era. Rallied to 1,500, collapsed to, I don't know, it looks like 700, rallied to 1,200, and then went on a multi-year, if not 2-decade decline to around 500 in 2002 or so. And then it started a rally that we're still in. It rallied to 2000, it rallied through Folks and into Helicopter Bend to a high rivaling, it doesn't name it here, but it looks like around 2,300, 2,400 adjusted for inflation. And then under Trumpism, it came crashing down. I'm estimating this is 2016, 17, 18, something in that range. So under the last years of Obama and into Trump, gold came down to under 1,500. Central banks were selling, as we've covered before. But also interest rates were low, so money went to a lot. There was malallocation of investment. Anyway, moving on, we got through Trump, flat, 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 and then we got the miracle of spending under the current administration, and we got back to almost 2,300, it looks, in an inflation adjusted gold prices per ounce. We had a collapse. We had a collapse. We had a collapse during that time, back down to maybe 1,600, because it was trying to punch through. Basically, gold hit an all-time high of 2,600, and we've had one attempt, a second attempt, doesn't matter who the president is. We got a pullback, and now we've broken through. We're right at the all-time high. My prediction, 1, 2, third time's the charm. Okay, let's start reading instead of my opinion. It should also be noted that the method of calculating inflation has changed. Based on the method used in the 1970s, the inflation over the last 40 years would be significantly higher than currently reported. So would the gold inflation adjusted all-time high. The U.S. Bureau of Labor Statistics has listed 3 major inflation revisions since 1980. Calculation by shadow government statistics, I think that's John Williams, now show a difference of 8 percentage points in inflation compared to the official statistics. All right, demand for gold remains high, going on with our reasons. Central banks, China noticeably slowed its accumulation of gold earlier in the year. India has accelerated it. And so in the second quarter of this year, India increased its gold reserves by almost 19 tons, almost as much as Poland did. The Bank of India has increased its gold reserves by 4.6% in half a year. It's striking that after a severe slump in 2022, over-the-counter gold transactions increased almost 8-fold in 23. This trend has continued in 24. Up almost 60%. A central bank's gold reserves are an expression of that country's economic importance. The Polish central bank now has 420 tons of gold reserves, more than the United Kingdom. In Europe, economic power is shifting from west to east. And I've told you before, All Germany, all Western Germany has to do is widen their rails, and they could start doing commerce with Russia, Asia, and get out of the nightmare that is NATO. Poland is one of the fastest growing economies in Europe. Adam Glapiński, president of the Polish Central Bank, emphasized that Poland aims to hold 20% of its currency reserves in gold. That's one central bank, and you should be a central bank in your own financings. Should you own 20% of your assets in gold? The current figure in Poland is 15%. 5 years ago, it wasn't even 10%. The reason given by Glapiński for the substantial gold purchases is, quote, none of our trading partners, remember Poland's right up against Russia, and investors can doubt our credibility and solvency, even when a dramatic situation is unfolding around us. In other words, in times of crisis, when it matters most, gold is more credible. It is a more credible guarantor of solvency than even the leading fiat currencies, the US dollar and the US euro. I know. Interest rate cuts boost the gold price. I'm not so sure. But anyway, let's read it. Wednesday, September 18th, amid intense speculation, the Federal Reserve cut interest rates for the first time since July of 2019 by a surprising 0.5 percentage point. After all, the last time the Federal Reserve cut interest rates by 50 bips, well, I'm not sure that's correct. Anyway, by 0.5% was in January 2001. That was the crash in the NASDAQ. And September of 2007, that was the start of the basically the financial crisis. The phase of falling interest rates, which began this bombshell, should certainly boost the gold price. It's happened before. We'll see. I'm not sure. I'm not sure that's the cause and effect. It just might. Anyway, it doesn't matter. It happened twice before. It can happen again. At the beginning of the 2000s, gold ran from US dollars 270 to 420, 60% during the interest rate cuts, which followed the dot-com bubble. Following the global crisis of 708, gold price soared from $660 to $1,600, more than 140%. During the interest rate cut phase in 2019-2020, the trade dispute between the United States and China, the pandemic, and etc., gold climbed by more than a third from 1,400 to 1,900 USD. So here's their picture of that. In the green, gold price rise of 31% when interest rates came down in around 2002. In the 2 years following 2008 and onward, gold rose 39% when interest rates came down. And then when interest rates came down in 2020, gold proceeded to rise by 26%. Sorry. Now, demand from private and professional investors is suspiciously low. Demand for gold remains subdued among private and professional investors. You know why? because investments are sold, they're not bought. You need these so-called advisors to call you up and say, Mrs. Jones, after careful calculation, my team believes you should own 6% of your assets in the Merrill Lynch Gold ETF. Anyway, most people won't buy until they're told by their pontificators. Demand for gold remains subdued among private and professional investors, particularly in the West. A Bank of America survey of investment advisors in 2023 found that 71% of investment advisors had invested no more than 1% of their portfolios in gold. A further 27% held between 1% and 5%. So if you add those up, that's 98% own less than 5% of their assets in gold, much less than that. So global ETF stocks have been increasing again for a few months with a total of stocks of gold with a total of 3,200 tons. That's the same level as the pandemic, but well below the peaks of 4,000 tons in October of 2020. ETF demand in Asia has been slightly positive. European ETF holdings are not so strong. Given the gold price trend in recent quarters, an increase in ETF holdings in North America and Europe from just over 3,200 tons to almost 6,000 tons would have been expected if one were to base this calculation on the historical correlations since 2005. There's a lot of room for improvement. Western investors initially turned down the invitation to the gold party. Now that the party is gaining momentum, they do not want to admit that they are party poopers. Therefore, they could only come to this party when it's in full swing by paying more. Another reason, geopolitical tensions remain high. The war in Ukraine has now been raging for more than 2.5 years. The situation in the Middle East has intensified as a result of Israel's massive attacks on Hezbollah and the invasion of Lebanon by ground troops. The danger of a major conflagration continues to hang like the sword of Damocles over these two conflict regions. The increasingly fragile geopolitical situation is becoming ever more apparent to central banks' balance sheets. The massive gold purchases by central banks since 2009 and the rising gold price have led precious metals share of global international reserves to increase to the detriment of fiat currencies. By the end of 2023, gold reserves will have overtaken the euro. This means that gold now ranks as second among central banks' reserves worldwide. The US dollar remains in undisputed first place, although the proportion of US dollars foreign exchange reserves has now fallen below the 60% mark. When I first started following this, the dollar was much higher. Anyway, in 2015, 2/3 of the currency reserves were still, in 2015, 2/3 of worldwide currency reserves were still accounted for by the US dollars. The BRICS summit in Kazan in October will show whether the move away from the United States dollar will gain momentum and whether gold, as a neutral reserve asset, will receive additional geopolitically motivated boost in demand. This development comes as no surprise when you consider the results of the 2024 Central Bank Gold Reserve Summary published by the World Gold Council in June. 66% of worldwide central banks surveyed said they expect a slightly higher share of gold in total currency reserves within 5 years. In 22, that figure was just 46%. The proportion of central banks who now expect gold to play a slightly or significantly smaller role in worldwide reserves has fallen from 24% to 13%. Not a single central bank now expects central bank gold holdings to fall in the coming year. 81% of worldwide central banks expect gold reserves to increase. Remarkably, geopolitical considerations are almost entirely insignificant with regard to the importance of gold as a reserve asset for central banks. Guys, I'm sorry, my eyesight is really bad, and my right eye is giving me trouble now too. It's kind of scary, but I do have my operation on January 15th. Concerns about sanctions are nearly as insignificant. Instead, hedging against inflation, the performance of gold in times of crisis, the lack of default risk, and high liquidity of gold are given as the most critical reasons for central banks to favor gold. Sounds like good reasons for you to own it, gold. Hedge against inflation, performance in times of crisis, lack of default risk, and liquidity. Sounds like good reasons. However, according to the Central Bank Gold Reserve Survey, a look at the central bank's demand for gold in recent quarters does not confirm the relative insignificance of geopolitical considerations and hedging against sanctions. The discrepancy between gold purchases quarterly before the outbreak of the war in the Ukraine averaged 118 tons. Afterwards, the quarterly purchase came in at 279 tons. This difference is too large to ignore. Actions count more than words. Here's the chart. The average over the decade prior to the war, 12 years, was around 118 tons a quarter purchased by central banks. During this war, average is 279 tons. Conclusion. Yay, finally he'll shut up. With a value of 61 as of October 10, the fear and greed index for gold is just outside the greed range. In view of the enormous price rally over the last year, a noticeable correction cannot be ruled out. That's true. However, there are numerous fundamental reasons to believe that gold will continue to rise even after a setback. Jimmy Rogers says, every rally has a 50% pullback on the way to its ultimate destination. It could happen now, but I don't think so. I don't think it will. At the beginning of 2024, gold successfully broke out of the cup and handle formation, which had formed on the technical chart since 2011. With a gold price of just over US dollar 2,600 at the end of September, the gold price has reached the year-end forecast, which our model gave. Given the further deterioration in economic and geopolitical conditions, our model of just over $4,800 US by the end of 2030 should be considered conservative. Against this background, even gold, which has become more expensive this year, is still cheap. As Michael Corsares said, quote, "In a bull market, the sideline is the worst place to be," unquote. This is an article written by Ronnie Stouffer in October. It's hard to find where to hit for their website. I found it on the other, let's see. Oh, this is not reinforcement learning. This is not the right website, sorry. All right, let me go. There it is. Okay, Railtown. Why don't you take me down to Railtown? All right. I can't find it. Wow, Seeking Alpha. Doesn't really say anything. All right, I can't find Railtown's website. I think if I go .ai. Frustrating. I showed it to you the other day. Let's look at Stock Titan. They say it's been accepted into AMD's independent software vendor. Let's see if they give a plus or a minus. No, They didn't give the pros and the cons, the days and the nights. All right. Maybe that's a signal to close this off. I'll answer some questions, hopefully without getting agitated. Oh, I thought you had a question, Andy. It's what's scary is this eye went completely blind over the last. I mean, I can see. I know there's light. That's it. But over the last sort of 7-10 days, this eye is. While I was reading, pieces were covering my. Is that the retina? I hope this eye doesn't somehow get covered up over the next weeks before I get the operation on this eye. Getting old isn't for sissies. All right, let's go up. I'll start. Wanda. I wonder. Bought more. That's great. Next week, I don't know. That the stock, I really don't want to get too involved in talking about it. But here's the stock from an old chart. That first line is right around $5, give or take. So does it break through? Maybe, because it'll be the fourth, well, either the second or the fourth attempt. I don't know what to call it. It'll definitely be the second attempt. Will it pull back into support? I'd have to say, Nick, that the prudent investor would assume that that's going to pull back to support the green before rallying again. But this isn't a current chart. It's a, I don't know. It doesn't have a date, but it's a. Oh, it does. It's an October chart. What? Yeah, this is an October chart, so it's missing some data. I'll print out a different one. But in any event, I think at any time you could get a pullback. But because I think I already said it, but I'll say it again, because of the if you look at the calendar, Christmas falls in the middle of the week. I think Wall Street's going to go on holiday on the 20th. So I don't know. I just feel like it's going to be shifted outward to January, maybe even February. And I didn't really think of that before because I didn't look. I'm not going anywhere for Christmas, so I didn't have it in my head. So anyway, that's just my caution. It's had a nice run. If I were in actually, I guess I can say that. I have a small position, very small, you know about. I sold some of it and bought RLAIF, RLAIF. What's my goal? If WLAIF rallies, like I think it will, I should do a chart on that, but I think it's more fundamental news. This is great news that's coming out. I don't know why people aren't jumping for joy. I guess joy got up and left. Anyway, I think there's a really good chance that, particularly based on the financing announcement, that those warrants expire after 10 days if the stock's at $1.20. And I read it to you, I just can't find it right now, on Saturday night, that RLAIF is run by a guy named Corey. I forgot his last name right now. But he built a company and sold it to Microsoft. And then he built another company and sold it to somebody else. So he knows how to do this. Is this company, did he put the team together, work on the software, raise money, and put 80% of the money towards software over the last few years to just not sell the company? I don't think so. So anyway, I think prudent management of even a small amount of money would be to try to take a profit, a little, even though it's small, because I have high hopes, and maybe try to get something to run. And whichever one's first, you can move into the other. Yeah. All right, let's go down. They just hit DJT down to 33. Well, I tell you what, a couple weeks ago, I don't think I overly emphasized it because I said it while Ham was talking, but I said, if I had shares of GME, I would sell GME and buy DJT. Why? Every time GME goes up, it doesn't go up as high as it did before, and they sell it down, they do a raise, they're just crossing stock, and people still hang in, diamond hands. And I said, get out of GME, get into DJT. That has the same, if not better, chance to the upside, but it's still alive with its story. It's not under control. Anyway, my point is, at that time, you could have bought DJT at like $29.75, $29.99. Are you out of your mind? It's still higher, and GME's down. So, yeah, don't get impatient. It's the pause for the cause. I think that's what I was trying to say, Andy. That's what I was trying to say. All right, I'll let Ham know that. His call tonight is with somebody. Well, anyway, I'll keep my mouth shut just in case I say something that's wrong. Yeah, David put it up. Environmental approvals, yeah. Sounds like Mad Max. I think your picture there is a tank and a I think that's an oil pump. Anyway, I think it's directed towards the energy business. And the key to keeping inflation down is to keep energy down. So anyway, the blended figures. Schwab bought $9 million worth of DJT. Wow. Could you imagine? I'm not sure. I'm not looking at a chart though. You probably have a chart. I'm not sure it's going to get back down to where it was. When you have an upward run, the pullbacks are higher than the previous lows usually. Will the shorts be hurt? There won't be a new symbol of finger after the dividend. Finger will still trade FNGR. The dividend, the warrant, no, actually, it's not. I don't know that actually. Will that warrant trade for a while as a warrant? I don't think so. I think you're going to just get your shares. But that's a good point I just made, and I don't really know it. I guess there'll be a brief time where the warrant just sits there giving you a right to exchange and you have to exercise at that price. Yeah. So I correct myself. You'll have finger and you'll have probably FNGR W or FNGRW1. They'll come up with a symbol. Both will trade. Both will probably have. Both will have counterfeiting, as we've come to call it. Both will have manipulation. Both probably will be fake. But what happens to one should happen to the other. I don't know what the strike price is. If it's $7, the warrants aren't going to be very expensive. If it's $3, they probably will be. Yeah, hey Gary, I thought I just answered that question, but I really think, mainly because of the holidays and any S1 is subject to approval, which, you need people working at the SEC rather than on holiday. I'd say it's a flip of the coin, but I think over the next, 3 weeks, I'd give it 50-50 that the stock pulls back into support. In the meantime, I think there's an exciting play just raising its head that I've told you about, RLAIF, based on news, based on volume, and it is trading upward. But what I notice in this modern world, things don't happen quickly enough for anyone's so it's RLAIF is 33.54 to 37.95. When I first started talking about it with you, this was 10 cents cheaper, depending on an average. The volume today is not that high, but I take that as a positive. It broke out, and now it's pulled back slightly on lower volume. But here's the news for Railtown since the end of November. They announced a European marketing agreement at the end of November. They announced a non-brokered private placement at the end of November. They announced full subscription of that placement. Then they announced they received the funds and they closed it at December 9th. And then today they've announced AMD. And that's just that news. Anyway, let's move on. No, they do, Mad Max. They have a term for it: hypothecation and rehypothecation. It happens in every market in the world. These geniuses will turn everything into more than one. I believe they do it with houses and mortgages, but they do it with bonds, metals, stocks, everything. They would do it with Taylor Swift if they could get away with it. It's called hypothecation and rehypothecation. Let's use a technical term for it. Every computer I have is slow. So the term, as described financially, hypothecation is a financial practice where an asset is pledged as collateral for a loan, but the borrower retains ownership and possession of the asset. Then the lender has a lien on the asset, which gives them the right to take possession if the borrower defaults on the loan. Hypothecation is most common in mortgage lending and margin lending in brokerage accounts. But how can they rehypothecate and rehypothecate and rehypothecate? They do. That's right. So in a mortgage, you lend it out once, but I believe they do it somehow with the mortgage products, but ostensibly that's clean. But with a stock, if Fidelity had these shares, they could lend it out once without telling me. And then the new company, they lend it out again and again and again. And that's how you make huge profits. Yes, I just said it's hypothecation. It's like a mimeograph machine. It's all fraud. Where do I see silver going in price? 6 months. I think silver is going to go to $90 sort of in the next 60 days. It could take longer, but I think it's going to go to $90. Could it just go to 80 or just go to 70? Sure, but I think silver is going to rally like a son of a gun as soon as people start feeling like they're missing out. Once it breaks $50, silver's going to go to 100, but maybe not directly, but that people are going to panic. I think silver will pull back when the world realizes that financial markets are way ahead of themselves because the world is not doing as well economically as everyone's thinking, and Trump can't fix it with executive orders. So I think we're heading toward, and I've said it quite a few times, I don't know if I still have my list here that I made in October. And I think I've given different numbers since then. But this might as well just use these. I think the S&P is going to go to 8,000 in a melt up. I think the NASDAQ is going to go to 2,500 in a melt up. I think the Dow is going to go to 60,000 in a melt up. And I think the Russell is going to go to 4,000 in a melt up. And I think silver will go to 90. I think gold in a melt up will be slower percentage move, but I would guess, I didn't give that thought. I'd be willing to say maybe as high as $4,000 an ounce in a melt up. But I think the central banks are going to hold gold from running because I think they're trying to make sure China still buys dollars or dollar assets. So I don't know. Maybe gold goes to 36. It just goes up 1,000 points from here. Then when the markets give up the ghost, my feeling is the indices could go down by 95%. I'm talking about a panic you've never experienced in your entire financial life unless you're older than I am. And not many of you are. I think there will be selling upon selling upon selling upon selling, banks collapsing, Merrill Lynch collapsing, and overseas banks collapsing. I think it's going to be a nightmare. But the markets have gone up with just a few names. So it doesn't have to affect the stocks we're in that are short. It doesn't have to affect the miners, or, for example. Why? Because they haven't participated really. But in that collapse, everything will get sold. Everything will get sold. So I think that your time frame of 6 months gets really tricky for me, because it's possible that the melt up happens within 90 days and the bust starts within 6 months. I don't know. It could take 2 years. I don't know. But when the bust happens, I think silver will pull back to I'd have to see how high it went, but I think it would pull back to $50. Would it break $50? Maybe. But I really don't see silver, even in a financial crisis and everything gets sold, I don't see silver going back to the $32 that it's trading right now. So, it's anything can happen, but I think silver will pull back. Let's say it goes to 90 and it pulls back 50%. That's $45. But it might not go as high as 90. I could be wrong. But anyway, I don't think you're going to see silver once it starts to run again. I don't think you're going to be able to buy at these prices ever again. Ever again. So I think silver is as cheap as you're ever going to see it. You were gifted a pullback, and everyone came on here, well, Trump got elected. You're all wet. I don't think you'll ever see silver at these prices again in your lifetime. Gold, I think gold could come back to wherever it goes. It could come back to 3,000, even 2,900. But man, after the loving, the money is going to pour into gold and silver. Why? Where's it going to come from? Our debt level is 36 trillion right now. In the bust up, I think it could go to 120 trillion. I don't know how long, but there will be such spending, and the Fed will be trying to rescue the world. I think the Fed's balance sheet could go, I don't know where it is. I forget where it is right now, but it went to 4 trillion or 5 trillion. Pick a number. Pick a number. The Fed's balance sheet could go to 30 trillion. Make it up and you won't be wrong, because the Fed will become the last rescuer of the entire world, as long as the world believes in our military strength. That's where the rub is. That's where the rub is. But for now, I wouldn't bet against the United States military. Will it work? I don't know. They'll try it one last time. But I think it's going to end in tears, and I think the whatever you want to call it, the rest of the world, Russia, Iran, name them: Russia, Iran, China, India, Brazil, South Africa, and many more, will just get on without the dollar. And how strong will our market be if the dollar collapses relative to gold? How strong will our markets be if the rest of the world realizes that all they're buying in ETFs are hypothecations? It's an intriguing question. We'll still have our native population. which used to be a powerful thing, but now we hate each other. Women hate Republican men. They dye their hair blue, shave, and they won't have sex for 4 years. Simp men hate all conservatives. And we argue. We even argue about what constitutes a man or a woman. We argue the definition of is. We argue the Constitution. We argue everything. So will we be able to stop doing that and stand behind, we are a free country. Everybody has a right to their opinion. There's a freedom of press, freedom of assembly. The sanctity of the voting booth is paramount. Journalism, do we bring that all back together? America can recover. But not if we continue down this insanity of Marxism and some sort of nightmare that's being taught in all the schools. It won't work. But I guess we just have to see it out. What we have here is failure to communicate. I don't like it any more than you, man. But if that's the way he wants it, that's the way he's going to get it. So anyway, I think silver's going up with everything now. If it gets to 90 or 100 or 80, I think it's subject to maybe a 50% correction in a collapse of the financial world. But then I see silver going to, parity with gold, 1 for 1. And I think gold could go to $40,000 or higher. But then, Hans, there's the problem. During the early phases of the move, that's wealth creation. In the latter parts of the move, it's just preserving your wealth, because the latter parts of the move means fiat currency. It means we go to some sort of new Bretton Woods, maybe in Kazan. It'll be called the Dacha Accords, and the world will have a new financial system. So the first move in metals, it creates wealth. The latter part of that move will be preserving wealth. So you got to get in early. The best single investment you can make today, in my opinion, is silver. There is no better investment than silver, other than telling your daughter you love her or your son. That's not true, Mad Max. It's just not true. And this is the problem. This is the problem that I get so frustrated with. And maybe I'll play a video next time where you can see it. It's just not true. You sound like you still have belief in the system. All they really need is a stamp from the stock loan department that they borrowed the shares. The shares don't have to be there. They just have to have the loan from the stock loan department. And they can sell. And they get it over and over and over and over again. Our securities markets are a Ponzi scheme. And it should be disclosed. It should be disclosed to each of us as we invest. At a minimum, disclosure should be required on the statements, on the confirmations, on the websites. If you invest in U.S. securities, settlement is not enforced. In fact, we allow the hypothecation and what do you think rehypothecation means? The first time is hypothecation. Okay, the bank, I'm Fred's bank. I lent out $75,000 and I'm going to keep this as collateral. That's Fred's bank has hypothecation. And I'm a conservative bank. Fine, I'm happy. I'll go to the club and have my bowl of Maryland crab soup and a tiny dram of sherry before I go home. But let's say I'm Ed Blankenfein at Goldman Sachs. I always forget the guy's name. I'm going to lend out 75 grand against these shares. I'm going to put it in my pocket at my stock loan department, and that's great. I've hypothecated it. But now I've got all the paperwork on it. I've got the signature of the owner and all the documents. So I own this now. Nobody's really going to ask for these shares. And I own Congress. I own Gary Gensler. I see an opportunity here. I'm going to lend these shares out 15 times. No one's going to ask for them. I just got to, if any one person asks to see proof, all I got to do is show them proof. I don't have to show all 15 people. So instead of lending out 75 grand, I'm going to lend out 1.5 million to broken up by 15 different people based on the hypothecation of these shares. The first one's a hypothecation. The rest is all fraud. Now, if I'm Goldman Sachs and I've got the first hypothecation in my pocket, I feel good. But let's say I lend my client $75,000 and my client leaves the money in Goldman Sachs and they buy 30,000 shares in the open market. Now they bought the same number of shares. I lent them the money to buy those shares. To my client number two, my first client gave me the lien, the deed to his shares, the signature on his shares. I have a right to sell these whenever I do want to, as long as the loan's outstanding. So client number one gave me, I hypothecated her shares. Client number two, that borrowed the money, borrowed the shares. Borrowed the shares from me, deposited them at Goldman Sachs. Okay, so client number one borrowed 75 grand from me. I took her shares and hypothecated them here at Goldman Sachs. But because we're greedy at Goldman Sachs, the vampire squid octopus, I don't have another. My other client number two, took his money and bought 30,000 shares, and now in his account are 30,000 shares, and I'm going to lend out against that. I'm going to hypothecate those. Well, are those real shares? Well, it's rehypothecation. It's rehypothecation. And that's why Patrick Burns says that Goldman Sachs is a stock loan department with an investment bank, a name of an investment bank on their front door. Hi, Andy. They're not reselling fraudulent shares. No, they get. Anyway, I've got phone calls to make. I skipped to your question on gold and silver. I think I answered it. Well, what happens when to RLAIF when the company gets sold? Let's say you buy your shares at 30 cents today. I don't know where it's trading, 35 cents. And let's say let's say it goes up 10x. Let's say by January, February, it goes to $3.50. That becomes a company roughly worth, I'll do it in my head, $500 million, roughly $500 million. Now let's say that they decide to sell the company to AMD. Well, they're not going to sell it for the market price. Let's say they sell it for $1.5 billion. So your 350, the company is purchased for $10 a share in a buyout. One, that'll be announced. Two, unless there's some issue, it'll be effected. So down the road, you will get from your broker dealer $10 cash. If it's an all cash transaction, more likely you'll get shares of AMD or some combination. And it just happens if your shares are at your broker dealer, it'll happen automatically. But the stock, it will likely, if there's a buyout, the stock will trade. There used to be arb desks. There will be arbitration. It'll probably trade. You'll tell by how close it gets to the takeover price, how the quants on Wall Street are risking it. But it'll probably trade at least to 85% of the takeover price overnight. So you then face a choice. Will I just sell my stock and have a taxable gain? Or will I wait, if it's a stock deal, will I wait to get new shares and I get a step up in my value without having to pay capital gains? I don't know. We'll play that as it goes. It's an oil rig. Do you think people that own gold and silver will be wealthier and just preserve the value of what the dollar was once worth? I mean, that's the trick with all assets. And I've tried to emphasize here for over a year that, and maybe a year and a half, 2 years, that we have to stop seeing our wealth in dollar terms. The key thing really should be, what do you want to own? You want to own a home. You want to own security. You want to own an apple orchard. You want to own a fleet of automobiles. You want to own whatever you want to own. But what's coming is that the dollar, which is already down, but we've been able to live with it, probably, nobody knows for sure, but probably the dollar will, look, there could be $2. There could be an international dollar and an American dollar. There could be, as Rickards talks about, a new financial system based on special drawing rights, which is the IMF. I think the only way that could happen is if the IMF moves its headquarters to Moscow or Tehran or Beijing or Hong Kong or something. There's no way the rest of the world is going to allow the United States to run the next financial system. We've ruined our credibility, and the rest of the world is disgusted with us. However, that may not be what happens. It's what may happen with Trump in office, with war, with the banksters, with the strength of our economy and the strength of our Constitution, the strength of our ideas. If we wake up enough, we can still become the real economic engine of the world. And maybe we become part of a basket of currencies, and that could happen. But regardless, there's going to be cycles in the value of assets. And Hans, I think yesterday, it might have been the day before, I read to you an article that showed you that the value of the world's, all the central banks in the world, the value of their gold holdings today is equivalent to the market cap of Microsoft. I think that's a cycle. I think that shows you that stock valuations, while I think they're going higher, have reached the top of the cycle. And gold, arguably, maybe it's not at the basement, but it's at the low stages of the cycle. And cycles oscillate. And I think gold will become overpriced. I'm not saying hold gold forever, but as gold goes up and Microsoft goes down vis-a-vis each other, another way of saying it is doing it, how many shares of Microsoft buy 1 ounce of gold? I can't make my calculator work right now. That right now historically favors Microsoft. That'll change over the next 5 years. It's everything cycles. But anyway, in those cycles, and it's true of houses, it's true of anything out there. But in those cycles, I think the first part of the cycle is creating wealth. The latter part, it gets a little trickier. If gold were to go to $40,000 an ounce, for example, based on Rickard's calculation a while ago, that if you put 40% backing, sort of not rigidly, to the entire I think he did M2. Anyway, the money supply, you get to 40,000 to my memory. Well, if the new financial system is largely dollar-based or largely paper asset-based, largely dollar, euro, ruble, yuan, I don't know what Iran uses, rupee, peso, it's possible that the dollar will retain enough value that you can say, you sell out of gold, you buy dollars, and you've changed your wealth position. My guess is it's either going to be that the dollar goes up and out and just ceases to be the primary world reserve currency, or the dollar totally collapses, but it'll be the last one. All the other currencies will also collapse. It's too hard to predict how all that comes out. But I believe gold will be a wealth creator first and foremost, and then it'll be a wealth preserver. And I'm not saying hold it forever. For example, this gentleman here, Mad Max, one of my goals in owning silver will have silver run up, and I'll go by producing oil wells. The true creator of wealth in the world is energy. You can't dispute that. Yes, failures to deliver can be covered by the other subterfuge they do is if you have an outstanding trait Mm. Mm. It's too confusing for people. If LLC number one sells 1,000 shares of Finger at $5 and leaves that position undelivered all year, Finger's now $2. They decide that they want to close out that position. They go to LLC number two, and maybe it's the real short. They say, hey, go buy my shares at $2. I'll pay you, and I'll guarantee you won't lose money. So LLC number two goes short 1,000 shares at $2. That 3,000 becomes bookable profit in the first account. But in the second account, there's an open short position that's at risk at $2. But they close that first one out. They cover all their costs, and it gives them a buffer. But all they've done is moved the risk to a new LLC. Now, in a case of DBMM or MMAT or Torchlight or MULN or anybody that listens to the liar lawyers and liar financiers on Wall Street, they will get that $2 down to 20 cents. And then they get it down like Lou. I know everyone loves Lou, but Lou got everyone buying that medical company. That was a big spin and rinse. Lou probably made hundreds of thousands, if not $1 million off of that recommendation alone. Why? Because from $0 to $4, $0 to $3, $0 to $2, $0 to $1, it's an infinite rate of return. And the money makers were making, hey, the volume was high, and they were taking your real money out. People made money, no question, but the shorts were covering if they needed to. But now it sits there dead, seller boxed. There's no risk. So anyway, Mad Max, it's 4:23. I can't go on much longer. I'll try to draw a graph and show you what happens, but they do not need to cover with real shares. What they do is move it to another LLC. And they should cover that if you believed in the system. But the clerk says, oh, you closed it. Great. Close the position. Lenders can't keep reselling fraudulent shares. Well, okay. I mean, I respect your faith in the system, but they do. I mean, there has to be fraud. There has to be lying. There has to be a lawyer that backs it up, and people have to look the other way. And you have to pay off regulators. You have to pay off Adina Friedman, either overtly, covertly, or the person that was coming here at 4 isn't here yet. And I guess I don't have to feel stressed yet. So anyway, you're welcome to believe. I mean, the gentleman who is honest, intelligent, devoted his whole career to the American Stock Exchange, agrees with you. I don't think that interpretation of facts has a predictive quality at all. But I'll try to show you 2 videos. It's actually on 2 videos tomorrow that will show you what happens in the, maybe if I can find it, I'll show you 3 videos tomorrow. Oh, they're all short. And you'll see it's fraud on a massive scale. I don't know why that drug dealer didn't get into this business. Escobar. Well, Mad Max, the market maker exemption, in general, they do not allow the selling to occur, at least initially, until a toxic convertible note or some toxic financing has been created with warrants or at the money. Now they triplicate, quadruplicate, octogenate, decibellate, all of those. They multiply those contracts by 10, 20 times fraudulently. So they're not even limited to the number that's in those contracts, but it's illegal what they do. I'll have to try to show that. It's so hard to get what's going on across. I'll try to show that as well. I'll try to show that again as well. The new SEC chairman won't change a thing. Won't change a thing. Hey, Leanna, how are you? Which stock are you right? There's a few here, but RLAIF. RLAIF. Let me see where it closed. Hey, lucky boy. You know, obviously I was recommending silver, and I like the other one that I've recommended now. Yeah, closed it. It looks like 34.5 cents, but the ask is 38 cents. I think if you can buy RLAIF below 40 cents, below 50 cents, I think there's a double coming very quickly, possibly more. And I think based on just the litany of news that's out there and the fact that this team has done it before and just how technology companies go, I think one of their partners, Microsoft, AMD, which just was announced today, NVIDIA, and it seems like a couple more, become logical buyers of the company. Does it take a year? I doubt it, because by a year, the technology could be, you know, last generation. 9 months, maybe 6 months, probably 90 days. Yeah, it could happen. So anyway, I think this is a classic company that could be bought out, and it'll run in the meantime. There's a private company. The reason I'm noticing this pattern, there's a private company in the oil and gas area that's following this identical pattern. That's how they say it in upstate New York, according to my father. He never said identical, but his friends did. So I recognize the setup. And just because the stock isn't trading upward, remember, there's no research analysts on Wall Street anymore. There's no trading desks. There's no squawk box call saying, today we're going to have our technology analyst rated in the top 2 in the world, Liana Vargas, address our brokerage system of 20,000 brokers, and we have a new recommendation, Railtown AI Technologies, and she's going to tell you about their partnership with AMD, with Microsoft, with NVIDIA, and she's going to tell you why we believe, as Merrill Lynch, that this is going to be the next acquisition for AMD. And the revenues should be growing rapidly because of this technology. This technology takes what used to consume a team of a dozen 6 months and costs and inefficiency. This technology, AI based, does it in a matter of minutes. But don't tell anyone, because they want to bill at least a week or two. This is a quantum leap in performance, in fixing software, developing software in all systems that use, for example, Microsoft. They are part of Microsoft's Azure system, and they got some sort of technical approval, C2 something or other. I don't know what it means, but they've got all the layers of approval to make this. And the CEO and 2 other members of the team, but the CEO built a company previously, sold it to Microsoft. He built another company, sold that one. This one, they raised the money, they've developed the software, they have the breakthrough with this AI technology, and they're starting to make, I mean, just the last month, they achieved SOC type November 22nd. Railtown achieves SOC 2 Type 2 compliance certification. These are all important steps, I think, to sell the company. They're just little clues that the company's going to be sold. When? I have no idea. But I think soon and for the rest of your life. Anyway, that's the one I'm recommending. As an idea, you have to make your own financial decisions. I don't know any of you individually or your financial situation, so I cannot make financial advice. Market maker exemption makes sense as they sell naked shares, but when naked shorts can't cover failure to deliver, it doesn't make sense to continue reselling the same naked short for shorting. Is this getting obtuse, or are we learning something? I don't know. I don't know. I don't know. I don't know. There are no public markets for microcaps. None. Now, Gary Gensler lies when he says we have the deepest, most transparent markets. CEOs and companies cannot raise money honestly in U.S. public markets. There are none. So what happens a CEO goes to Benchmark and says, we'll hire you to raise money. They said, well, we'll do research on you. We can make a market, look at our brilliant track record, but let's introduce you to the Lynn Partners. They have a backdoor payout scheme with the Lynn partners. So let's say you're finger motion and Benchmark's introduced you to the Lynn partners. The Lynn partners says, you know what, we love it. Let's see, you got volume, you're breathing, you've made your filings, and you got some sort of baloney story you can tell the world. Hey, we love it. What's your average daily volume? All right, we'll raise you $5 million. $5 million. We'll raise that for you. And being a CEO who needs money and there's no other place to turn, and you were recommended by Benchmark, and there's lawyers there that makes it all seem proper, and everyone at Benchmark and at Lynn Partners dresses well and have money, and there's a track record, and everyone says the nice thing, you say, oh, right, my gosh, $5 million would allow my company to grow. Fine, we'll do it. Let's draw up the paperwork. Lynn Partners calls 4 hedge funds. I don't know the names. Lynn Partner calls 4 hedge funds. They say, we got another sucker. Here's the symbol. We're going to need $6 million because we're going to do face value of $6 million. So we need $6 million in our account. The hedge funds, let's just say one hedge fund, says, okay, we'll do it. One hedge fund says okay to the deal. Let's say, for sake of argument, Finger Motion is trading at $6. That hedge fund goes out and sells 1 million shares at $6. Shares that do not exist, shares they do not intend to deliver, shares they have not borrowed, but they sell those 1 million shares at $6 based on a phone call. Jeff Easton calls the hedge fund. The hedge fund's who trained Jeff Easton. The hedge funds is who gave the legal documents to Jeff Easton's attorney, who was probably supplied by the hedge fund. The hedge fund is going to take 70% of the profit and give Jeff Easton 30%. And cover all costs. Make sure that Jeff Easton doesn't go to jail as long as he follows the rule, the playbook, and never calls directly to Steve Cohen on his cell phone. So the hedge fund sells 1 million shares. They get the $6 million. Documents are drawn up. $6 million is given to the Lynn Partners, and $5 million is given to Finger. 5 million is given to Finger. Hey, you funded it. It's great. They never disclose who bought the shares on the offering. The $1 million goes to Lynn Partners, but it gets chopped up, pay off people, pay back, boom, bop, boom. Okay. The contract is for 1 million shares. That's what the company agreed to sell. So the company sold 1 million shares. And for sake of argument, we'll say those are real. They put those in the transfer agent. So those 1 million shares are placed at the transfer agent. Lynn Partners can sell those, own those at any time. But there's a hitch. Lynn Partners works out a deal that they can, and now I'm making it all up, they can ask the company, the first part I told you, the finger motion doesn't know about. So now they're going to say to finger motion, we'll raise the 6 million, but we're going to do it in tranches. They already did it with the hedge fund, but now they're going to say to the company, we'll do it in tranches. Although what I notice about Lynn Partners, they tend to do it right up front. But every situation is different, whether it's in tranches or up front. But here's how we're going to do it. We're going to give you the money, but we have a right to sell stock into the market. Let's make it up. 20 days. So they have a deal in the contract. We can notify you at any time that we are going to sell stock, that we're going to give you cash, but you have to give us stock based on the previous 20 days trading, the lowest average price of 5 days, the lowest 5 days average price, and we got a 75% discount to that price. So what do? The hedge fund, they start selling the stock, and they make sure that the price is down, 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 and they got a discount to that. Now, obviously, in that case, 1 million shares isn't enough. So the company has had to put up, let's say, 10 million real shares to cover the future of these trades. Now, this document, by their lying lawyers, goes to a prime broker, Alpine, Jeffries. But guess what? That lawyer doesn't tell other prime brokers. They give that same document to other prime brokers. Probably. I mean, I don't know exactly, but they give it to others. Or the primary mothership prime broker just tells the other dealers that they have this document. Now that 10 million shares, you think, well, that's the limit. No, it's not. Once this document is in, the prime broker checks boxes on the approval form, and they say, oh, okay, well, we know that at any time you can get 10 million shares. Well, the problem is there's a 6-month waiting period. That doesn't hold up. That doesn't scare little Bill. That doesn't hold any of this criminality up. But they know in 6 months and thereafterward, they can get 10 million shares from the company. Well, remember when we started talking earlier? Not everybody's going to ask for shares all at once. It's a fact. Why stop at 10 million? Well, let's sell 100 million shares. Because what do? You take the $6 original price that only the hedge fund traded, you trade that down to $2, and you've sold 100 million, 200 million shares. What do you have? $1 billion sitting in cash? You've sold 100 million, 200 million shares on the contract that said 10 million shares. You know nobody's going to ask for their shares all at once. So now what happens? The company spent the $5 million. They've got a great contract. Their best thing since sliced bread. A guy with 3 first names and dyes his hair and British accent has a contract that's going to change the world. And it's his fight. It's his $1 billion fight. Well, now the stock's $2. He says, you know what, Jeff Easton, I need more money. We're so close. And Easton says, all right. I hear you. We'll do it again. We'll give you 5 million in tranches, although they seem to do it right up front, but you get the idea. They tell their hedge fund, the hedge fund sells enough shares at $2 or roughly $2 to give 6 million. They take 1 million, chop it up, 5 million goes to the company. But by the time the tranches and all the toxic formula and the selling happens first, it's down to 50 cents. It's delisted. So you're saying, well, they can't keep selling all those fake shares. Let's say they sold 500 million shares through the two processes. They sold 500 million shares, let's say, at an average price of $2. So they got $1 billion sitting in their account, multiple accounts, and they can really only partially deliver. They keep moving it around and hiding it, trying to drive it to bankruptcy, trying to drive it into help me, I can't get up status. But they can't take that money out. Why not? Why can't they take that money out? Because on the 500 million shares, I'm making it up, they have a $3 maintenance, $3 per share maintenance. It can be called something else. But they have a requirement for every share they've sold to have $3 in their account. So they can't take that money out. And it keeps costing them money every month. But let's, in this example I give, they need to have $1.5 billion in their accounts to maintain this position. Now they may have agreements because they're a good client. They may do it against their houses or their other assets, who knows? But they can't get access to this money. I mean, money's money. So if they have other trades going on, maybe they can do bookkeeping somehow. So what happens? Well, they get it down to 50 cents, 25 cents. And they're talking to Jeremy Frommer. And Jeremy says, we see no evidence of criminality, and we're gonna fix this. I'm gonna have space calls. I'm gonna start CEO block. I'm the most honest guy out there. I have the courage to talk. So I'm either an idiot or I'm in on the game. But what I'm gonna do is the mother of all reverse splits. I'm gonna give you one share for 500 shares. That's going to be my reverse. So what does 500 million shares become? It becomes 1 million shares. At a $3 maintenance requirement on your $1.5 billion in your account, you're only required now to maintain $3 million. You haven't covered any shares. It's just the outstanding shares of the trade have gone from 500 million to 1 million. So your prime broker no longer has the risk on 500 million shares, just 1 million. So what happens to your money? You're not paying taxes. You can take 1.47000. You can take $1,470,000 out of your accounts. There's no record of a closing transaction, no taxes paid, and you can wire those to Frankfurt. And what happens to Jeremy Frommer's company or any company? The stock price goes from, let's say, 50 cents it's usually from a much lower price, to $250 a share. It's usually a much lower price than that. But they drive this one down too. They just start it all over again. Now you're saying, well, they can't do unreal shares. That doesn't enter into any of this. It's just that they can promise, if they need to get some shares if things go haywire. But there's never 1 minute in this whole process that real shares are ever needed, except in an exception. They just want enough there that in an exception they can make something happen. Otherwise, it's a whole scheme to destroy. Anyway, I'm going to move on. Wow. Your dog looks like my dog, Tex. Well, Tex must be the best boy in the world. I hope your boy is young. My boy is old and He can't even walk over there anymore. We used to walk 5-10 miles a day. We walk half a block now. But I still love him. Still love him. No, man. Look, this argument of real shares, fake shares, that's just there to confuse us. They don't follow any rules. It's all about stealing on a massive industrial scale. And no one cares. We all know, we understand, Arthur, that it's small. Hear great things about RLAIF. Let's go. Tom R. Trumbull Tom. Those guys are next level. There you go. Maybe I can have you come on at some point. Trumbull Tom. No faith in the market. But my understanding why FTD happens because they can't locate the real shares, but maybe they are covering the whole system, covering everything with fake. Talking to myself because nobody's home. Da-na-na-na. Yeah, I'm at the limit of explaining that. I can't tell you, I'm not a cheater, I'm not a criminal. I can't tell you every single step of it, but that's the broad concept. Stop looking for the system. It's not going to happen. They're not going to settle the trades. I think what has to happen is two things. Full disclosure. And secondly, you've got to chop out the lower market cap stocks, $1 billion and under. But you can't set a specific price. You got to give a range, maybe $1 billion to $5 billion. But even that can go higher, because if you give a specific range, they'll destroy everything above that cutoff. They use the law, they use the rules to cheat, lie, manipulate integrity, and manipulate honesty, and they go home and they feel great about themselves. But anyway, pick a number, $1 billion, pick everything under $7, and don't allow high frequency trading. Don't allow the market maker exemption. Don't allow sales of stock that are not owned or borrowed in writing beforehand. Do not allow hypothecate. Well, you can hypothecate once. It cannot be rehypothecated. In this day of sophisticated computers, these shares can be loaned once. The new buyer can't lend them out. Just once, me, I can loan them. The next woman can't loan hers out. ETFs, no ETFs can buy these smaller stocks. You're going to say, well, that's bad because that's demand. Yeah, but then they can also hide that they're the ones that are lending those shares multiple times to the loan desks. ETFs are a way for this entire fraud to continue. To pretend my life will never end. So my two things, disclosure, make all of the tricks and crimes. They can do it with the bigger companies because we're never going to win that battle, I don't think. But why is that okay? Because hedge funds on the long side have trading desks. They have research and they have buying power and they have congressmen and judges in their pockets. The longs. But down here, there's nobody. So make it illegal. That's what I think. And I also think you have to arrest CEOs if they sign toxic financing. Well, that's not fair. They don't know what they're doing. Well, tough titties. The SEC is trained to go after CEOs, much like Democrats are trained to go after white straight males because they remember black and white TV riots about race back when. I mean, it's not perfect, but the SEC remembers CEOs back in the high-flying 70s and early 80s who manipulated over-the-counter stocks, and they're only trained to go after CEOs. They're not trained to go after hedge funds, banks, the guys that run the big concentrated positions, ETFs. They're not trained to go there. They're only trained to see that CEOs defraud the market. That's why with what's now Nexbridge, they're going after Greg McCabe and John Berta, not after the criminals offshore who got this thing trading and started selling in Frankfurt and Chicago with one share. They're not trained to go after that. Just like a modern Democrat can't see that racism exists across all races, all people. Slavery throughout history existed across all manner of the human experience. Doesn't make what happened here less evil. It was evil and is evil, and racism fundamentally is evil. But it's different today than it was then. It's different today than when I was in high school. I know that, and I'm not going to give examples because by giving examples, it'll be provocative, and I don't want to be provocative. I'm just saying the SEC is solving yesterday's problem. CAVR is up 20%, down 20%. Up. That's a trading stock, Vin. If you can do that every day, that's great. CAVR. All right, my audience has disappeared. I guess I brought up race, but it was meant to make the point about CEOs. Okay, since my people have left, I should leave. I appreciate that everyone joined in. One suggestion I'm having, and it's so strong though, but you've doubled your money in that one stock. Maybe, just maybe, take a little bit of that profit and play RLAIF. I now think, just to be specific, I think RLAIF has a better chance of going to that $1.20 number that's in the financing sooner than anything else on my plate. So anyway, I'm going to leave it there. I'm going to wish everybody happy Wednesday, and we'll catch up tomorrow. Thank you for tuning in. Cheers.